markets. Finally, the markets are back and ready to go.
It's a busy day. Happy Wednesday, Francine. Here are your top stories then. China's recovery weakens. Retail sales crumble as consumers pull back in the face of new COVID outbreaks. Global gas rallies. Prices shoot up as the spectre of winter approaches. Italy's Mario Draghi says he is ready to intervene. And Apple debuts its new iPhone, but the lack of a major upgrade pushes the stock lower.
So, Tom, let's have a look at the futures. We're 12 seconds to go until markets open. Quite a lot of excitement out there because we have quite a lot of news. Of course, we have China that filtered through some of the European futures. And of course, that's filtering through then what we could expect from the S&P 500 in the US. I have to say, I think it's the sixth straight time in a row that the S&P then sold off. So it'll be interesting to see what some of these indices are doing. So you can see DAX futures, all right, they're trying to stabilize. I think we're looking at the DAX. I don't know whether, Tom, you have a better picture actually of what exactly is going on. But again, the picture is one of kind of a lot going on. They went through the inflation data and the market saying, okay, great, let's move on.
Yeah, even though the taper timeline for some has been pushed back as a result of that softer CPI print out of the US. Inflation discussion shifts to Europe. We got that number out of the UK, the highest CPI print here in the UK for more than 9 years. The FTSE 100 is currently flat. In Germany, it's a similar picture, a little bit more downside over in Spain, down 0.2%. All the governments now across Europe having to weigh up these higher gas prices. As we mentioned in the headlines, Italy's Mario Draghi looking to step in. We've seen action from the Spanish, the Greeks, the Germans and the French are also looking at what they can do. In terms of what's happening across France, then the CAC 40 is in similar territory to what we're seeing in Italy and the UK and Germany. Flat as a pancake so far in the first few seconds of this Wednesday open. It is the Spanish IBEX that stands out with a drop of around 8 points. Let's look then at some of the sectors. Bottom of the list yesterday were basic materials. That was a component as a result of what happened with iron ore prices that were coming off, and that weighed on that sector. It was technology that was the top of the list yesterday. Today, you're seeing tech gaining 0.3%, getting back into that pole position in terms of technology. Lower yields, of course, and lower interest rates seen as positive for that sector. The banking sector, that's the flip side of the yield story, really, weighed by those low interest rates. The stock 600 banks currently flat to lower. In terms of what's happening in terms of financial services, gains of 0.1%. And the auto sector is under pressure again. Supply chain constraints remain, semiconductors, and how these automakers are getting cars onto the forecourts, down almost 0.2%. Let's look at the map then and show you what's happening across the world. We mentioned the China data, a drag on what's happening over in Asia, and this focus on Macau and casinos. Some of those casinos in Macau, by the way, falling more than 20%. The shift in regulatory pressure away from technology, arguably, to what's happening in the gaming space in that part of the world. But it was the China data, the retail sales that were the drag there. This is how it's bleeding across then to Europe. You're seeing again, it's a bit of a flat picture. The UK, over in Germany, France, and the standouts in terms of what is happening, the price movements are really what's happening in Spain, down 0.3%. As Fran mentioned, the US markets closing lower yesterday. The futures, though, in the US pointing just about up. Francine.
Yeah, exciting day over on the market. So Luke Higmore is very excited. He's Aberdeen Investment Director. And I know, Luke, we've had a couple of interviews where actually it was a summer lull and now the market's roaring back. Is the S&P just dying to find a reason to sell off at this moment?
Well, possibly. I think the valuations look really stretched. I think we could be coming into a Q4 that remains difficult to see anything but slower growth for me. And I think we'll see the S&P reflect that. September can often be a bad month, as can October for markets. We could be running into a bit of a problem, I think, in the US. It may not be much, though, because the Fed is still there in the background, even with all the tapering talk that's going on. And yields are still very, very supportive for equity market pricing, I think.
Luke, where does that leave you in terms of how you look at value versus growth? Tech has been something of a safe haven. Does that continue in this lower yield environment? 1.28 on the US 10-year.
Tom, I think it might come back into an inflation question again. We've seen tech valuations storm ahead when we've had inflation kind of coming down. we are seeing some signs of that with the CPI earlier this week, but they look stretched. It's really hard to say anything else. It's difficult to find the value. It's difficult to say these are easy buys now. And I thought Apple's iPhone launch yesterday was a bit of a damp squid as well, leading to maybe, again, that could be the area that we see the biggest weakness come if we see this market sell off, which, as I said, could easily happen, I think.
Luke, I can't believe you weren't tempted by the superior camera experience in the new Apple 13. When you look at overall the focus of markets on inflation, I mean, yesterday they focused on inflation, then they moved on. What is the market actually focusing on now? I don't know whether it's gas prices and the fact that we could be sitting on a huge energy crisis that could actually reprice a lot of assets.
Oh, well, that's certainly the case in Europe, isn't it? This ongoing, is Russia playing a game with Europe in terms of the Nord pipeline is really important for gas pricing in Europe. And I've just refixed my utility bills, Francine, and they are a lot higher than last year. That's going to feed through to inflation as well. And, you know, if that drives consumer behaviour, it's not just a few pounds every month. It's a lot of money every month that changes for consumers in Europe. So we could see inflation in Europe driven by that and a change in consumer behaviour to lower spending because of it as well. So, yeah, gas is well on my radar right now as a big problem.
And look, that is how we link gas prices. That's how we link gas prices to the consumer and to the iPhone 13. Luke is going to be holding off on his iPhone 13 because gas prices and utility costs at home.
And he'll buy jumpers.
I would buy one.
So Scottish.
Switch to jumpers. Maybe that's the way to go. In terms of that hunt for yield, then you're just saying it's uncomfortable to look at the valuations and to want to increase your exposure in equities, particularly this month, given all those factors you've outlined for us. What is the opportunity in credit where spreads have continued to narrow?
If, and it's a big if still, we are in a transitory inflationary period, credit could actually perform really, really well from here. If yields stay low, that hunt for more yield will just drive people more and more and more and more into credit. So, you know, we are long those areas where we can get some good carry. And the junior parts of bank capital debt remain a really important play for us. And some of the areas where actually you could see an improvement come through with consumer behavior, like entertainment parks, for example, in the US, I think that plays out as well. But the broad credit markets are only going to move better if that inflation continues to come down. And there's a lot of questions. I thought John Arthur's article this morning, great.
Yeah, when? I know you're saying about if, but actually at some point, something will have to give, even if it's 12, 18 months from now.
Yeah, that's fair. And it's all about where the top is. You know, there's a lot of people talking about the top is in. I think it's too early to call that. I think we could see the top in inflation coming in probably January, maybe even February, and 6.5% in US CPI quite easily. Post a pretty slow growth period in Q4 as well. We may be talking about stagflation, but it's probably, as you say, only for a short period of time. If that starts coming again, as I said, that will be supportive for credit money markets for sure.
Okay, Luke, I don't want to add to the dour mood. It's a bit of a dour mood, isn't it? But we can up things, up the tempo in the next few minutes. But China and the recovery there, it's starting to look pretty wobbly. Are markets or investors underestimating the potential impact of a more pronounced slowdown in China?
I don't think they're underestimating it. I've seen a lot of downgrades to China growth over the last couple of days, and they're not small downgrades. These are like 100 basis points off their forecast for the full year. Still pretty reasonable kind of numbers in the 6 maybe 5% area, but you know they are coming down pretty quickly at the moment. And those retail sales this morning were pretty awful across the board. People staying at home again and not going out and eating because of COVID, and lower clothing sales. These have big impacts right around the world. And, you know, I know we've been talking about commodity prices as well. It has an impact.
Yeah. Do we need to stop talking about China on China GDP and forecast? And do we need to start thinking about when, you know, China regulation and crackdown starts hurting the rest of the world?
Yeah, maybe. Although the world has a long-term track record of getting past regulations and crackdowns and then being a thing of the past and getting on with growth again. So I think the latest moves that have been rolling now for what, 5-6 months, they will go past us. We will get back to a more normalized relationship with China and regulators. It's for now, it's probably more about how the central bank reacts to this slower growth profile and how quickly they react. Do we see more R cuts? Do we see a relaxation of some of the tighter credit conditions that they put in place to try and keep growth on an upward trajectory, which I think they'll do? Question becomes how quickly they do it.
Yeah, the consensus seems to be forming around the view that you're going to get another R cut at some point this year out of China. Luke Hickmore, thank you for your insights and analysis this Wednesday morning. Aberdeen Investment Director. Okay, coming up, US consumer price growth cools while UK inflation, as we mentioned, surges to its fastest pace since 2012. We're going to discuss that next. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. We're 10 minutes into the European trading day, and we're seeing a little bit of pressure across the board. Again, we were just talking with Luke Hickmore of Aberdeen. We're saying that the markets are back. They're exciting because actually there's quite a lot of volatility, a lot of news stories that it's starting to filter in, so it's not the kind of binary inflation. Do we have it? Will it lead to the Fed hiking or not? Now it's much more subtle. There's gas prices in Europe really, putting, I guess, some of the recovery in jeopardy, and there's a lot of stuff going on in China. Now let's take a look at some of the stocks on the move this morning. My personal favorite, Deliveroo. Now, I love tracking Deliveroo. I was joking with Tom, actually, in the break that I am a big fan of Deliveroo, especially since the pandemic, because they've added a lot of groceries that you can buy online. The concern with Deliveroo is, of course, how do you make money? So if you're a prime customer of Deliveroo, you pay $3.99 a month, and it just doesn't cover the costs of the drivers. Today, they're announcing a subscription model, I guess, with Amazon Prime, where if you're on Amazon Prime, you get delivery with Deliveroo for free, and the stock is gaining some 1.6%.
that's smart. Okay, so that's the upside to the pandemic in terms of the corporates that have benefited from that shift. But the downside, H&M feeling that in terms of the lockdowns, the pressure on their stores, of course. So they're reporting sales for the third quarter, missed the average analyst estimate. You're looking at third quarter sales. You can see the stock down almost 3%. Third quarter sales, 55 billion Swedish krona there versus the estimate of 57 billion. Again, they were pointing to lockdowns, restrictions that continue to hamper their development, particularly in Asia.
We're also looking at Darktrace. Now, if you've never heard of Darktrace, you're lucky because it's a cyber security company and it basically keeps you safe when you're online. Now, the share price is gaining 10%. It raised its outlook for revenue growth this fiscal year. Again, it's a UK cybersecurity company, and it says that because of demand, so because of cyber attacks and things like that, it's planning to add to its sales team and expand its research hub. If you look at the shares actually of Darktrace, it really soared since they IPO'd.
Yeah, benefiting that focus on cybersecurity. Okay, switching now to someone that Francine knows very well indeed. ECB President Christine Lagarde says the economy is recovering faster than expected. She now expects the euro area to reach pre-pandemic output levels before the end of the year. She spoke exclusively to Bloomberg's David Rubenstein.
Europe is recovering more rapidly than we had anticipated, and we have, as a result of that, significantly upgraded our projections. So our projection for this year is plus 5%, so it's a significant upgrade, plus 4.6% next year, and back to sort of pre-COVID type of growth subsequently. But this year is certainly going faster than we had thought, to the point where we will have recovered to pre-COVID-19 levels before the end of the year, 2021. We had anticipated it would be early 22 at best. It's now going to be in 21.
Well, are you worried about the Delta variant impacting what you've just said, or the so-called Mu variant, which is now something that's on the horizon?
It's very closely related. We used to say that the best economic policy was an accelerated vaccination rollout. Well, we are still in that situation where vaccination matters enormously. But on that front, Europe has done quite well. We have more than 70% of the adult population that is completely vaccinated in the euro area. And some countries are doing actually better than that, in excess of 80%. That has been a significant boost for growth, and it has helped governments not go back to the stringent containment measures that we had seen previously.
You put together a package that was designed to make Europe solve their economic problems as it dealt with COVID. The United States had a similar package. In hindsight, would you say the package worked as well as you thought, not as well, or better than you thought?
You know, when we put it together, we were hopeful that it would work. But you know, truth of the pudding is in the eating. And it was a matter of days before we really appreciated that message was received. Fiscal authorities began to act in tandem and in good coordination as well. And I think the impact of next generation EU, when all Europeans decided to go and borrow together jointly, this entire package actually responded well and fast and big to the unbelievable crisis situation that we faced. So all in all, I think it worked well, and it certainly, we responded, I think, faster and better than we had in 2008 and then in 2011 in the European sovereign debt crisis.
European Central Bank President there, Christine Lagarde, speaking exclusively to Bloomberg's David Rubenstein. Again, it's a kind of, walking on a tightrope where you say the recovery is better, but you have to look at inflation and certainly have to guide the markets. I'm going to miss seeing the libraries of, the C-suite.
I was squinting now. I was trying to pick out what she had in the lineup of books there. No doubt they would be good reads, though, if this behind Christine Lagarde.
I know, all students saying,
Take notes.
I need to read that.
These are the Christmas shopping list for books.
The Bank of England has warned that the EU, or has warned the EU over its post-Brexit plans on clearinghouses. Since the UK's withdrawal from the bloc, trillions of dollars of trading have already left London because of regulatory hurdles. Well, here's the Bank of England Governor Andrew Bailey.
I think that if they want to take a decision to break the system up, then it's important to consider the risks to financial stability that come with fragmentation. This is not a sort of idle, you would say this, wouldn't you, coming from the UK central bank. That's a real threat. Again, we put central clearing at the heart of the system post-financial crisis for a reason.
Fran, I was just going to say, I mean, you conducted this interview, you know Andrew Bailey very well. The need for ensuring the right kind of regulatory approach.
Yeah, and the conversation was mainly on clearinghouses. I mean, the most boring thing in the world, unless you no longer have them in London, which means that bankers could actually leave in droves. So for the moment, the EU said, look, you have an extension until June 2022, and then you have this like proxy fight on what happens with all the clearinghouses. So, I love this kind of stuff. It's all about regulation, and it has a huge impact on the market.
It's one of those things where it's when you lose it that you feel the impact.
Right. And then if it's fragmented, then it has huge implications for liquidity. Now let's get straight to Danny Berger to talk about the latest on inflation. Danny, we had CPI, the market digests it. Should we stop worrying about CPI now?
Unfortunately, we can't, Francine. It's one of the many things vying for market attention. Now, the issue with yesterday's CPI figure is you had the second month in a row where both headline and core missed. So you could say, okay, chalk this up as a win for Team Transitory. But if that was the case, then the market reaction has been very confusing. It wasn't enough to pump up equity markets, which have been slowly leaking over the past month, or rather week or so. We also saw a yield curve flatten to its most in a year. So those would indicate that this inflation debate, transitory or not, is far from over. As Sarah House of Wells Fargo points out, that there's a lot of areas there where prices are pretty steadily picking up, things like rent, for example. And where we saw prices decline, well, those were areas where demand had been accelerating due to the reopening, things like hotels and airline costs. If those are now moving lower, it could be a concern of global growth in demand, which again brings in some of the China data we have today, concerns of global growth weakening.
Okay, Danny Berger, thank you for breaking down the inflation picture for us. Okay, coming up, California streaming. Apple holds its flagship event virtually to introduce new iPhones, the iPhone 13. But what investors think? We're going to discuss that next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Welcome back to the Open. We are 23 minutes into the European trading day, essentially flat across your European markets, just edging slightly lower today. It's been in red since the beginning of the session, 24 minutes in, as we say, weighing up, of course, what's happening on the inflation front. We had that UK inflation ticking up much higher, the highest in about 9 years. And, of course, over in the US, we had a CPI print that came in slightly below estimates. On the corporate front, you had the likes of Inditex and H&M coming out with earnings as well. OK, Apple has unveiled a range of new products at its much-anticipated and all-virtual event from Cupertino, including the big showcase, the new iPhone 13. The announcements may have excited Apple fans, but not so much investors. Here with the details is Matt Bloxham from Bloomberg Intelligence. Matt, what stood out for you?
Yeah, not so much, to be honest. I mean, these days, these kind of product launches are so well flagged that there are a few surprises left for us to wow over. I mean, it was a very familiar narrative of better cameras, faster processors, longer battery life, better screens. So, as a package, there's a lot that's gone into this, and I'm sure it will keep, as you say, consumers interested in upgrading, but nothing here that would be kind of more than a kind of incremental or kind of business as usual upgrade. No real wow factor for investors to kind of get incrementally excited about.
But Matt, I mean, I'm never excited until my husband then gets a new one, and then I'm jealous, and then I get excited. So, I mean, I do not recommend this dynamic to anyone. When you look at the upgrades for the iPhone, what does Apple need them to do? Do they need people to buy upgrades, or do they just need them to buy, to stick to the iPhone and not switch to a competitor?
Yeah, I think it's a mixture of the two. I mean, I think in reality, with about 1 billion or so, iPhones out there in the market, they've got a big ecosystem, and I think that's largely a captive audience. So I think that there is an emphasis on getting people to move through the family of products, perhaps getting more people to buy the more expensive Pro models. And certainly, there's still a differential in terms of performance and features on those Pro models that might encourage more people to do that. And obviously, we've seen, particularly in the US, the carriers are offering some very big incentives for people to move to those more expensive phones and buy a more expensive data plan to go with it.
OK, Matt Bloxham from Bloomberg Intelligence, thank you very much indeed. So Matt's saying that there's a bit of a damp squib when it came to product launch. The iPhone 13, it did have one feature that stood out to me, which is with the video feature. So they've got the kind of video feature that allows the backdrop to be blurred and the front to be in focus. So the cinematic mode. Thank you, Sarah Rappaport.
I can get behind that 100%. If I can take beautiful pictures with a click, and also you have 2 cameras, right, instead of 3. Some people are phobic about that.
Trypophobia, a fear of tiny holes. That freaked people out with the iPhone 11.
Okay, Tom McKenzie with some really fun and weird facts. Coming up, the pandemic has fueled Europe's appetite for tech startups, so we'll bring you that story next. This is Bloomberg.
Boosters work, and they would definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. it's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? Should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open. We're 30 minutes into the European trading day, and here are your top stories. China's recovery weakens, retail sales crumble as consumers pull back in the face of new COVID outbreaks. Global gas rally while prices shoot up as the specter of winter approaches. Italy's Mario Draghi says he's ready to intervene. And Apple debuts its new iPhone, but the lack of a major upgrade pushes the stocks lower. So, Tom, there's quite a lot going on in the markets, a lot of stories, but also filtering through the asset prices. What are you seeing in the markets?
Yeah, and that read-through, of course, from the China data that you flagged as well. Retail prices, that was a standout for me in terms of the data from China. There's a question mark. There are links, of course, between Europe and the big companies that have exposure to that economy. Think the luxury goods makers, the automakers as well. There are implications there, of course, globally, but Europe no less than anyone else. A crude through now for the markets, down 0.1%, so further downside after closing in the red yesterday for European stocks. The question marks are going around gas prices, how that's going to squeeze corporates, but also households, and what the policymakers are going to do to step up. You're seeing that from the Italians, the Greeks, the Spanish and the French are also looking. The FTSE 100 is essentially flat. That CPI print, the highest in more than 9 years, putting into question whether the BOE will have to speed up its approach around rate hikes. We spoke to Andrew Bailey. DAX is currently flat to unchanged, flat to up. The CAC 40 is down 0.1%. Let's switch on to the sectors then and see how this is reading through. It was the basic resources yesterday that were under pressure as a result of the sell-off in iron ore. Currently it's energy that is top of the list, up 0.6%. Again, the question marks about gas prices and what kind of squeeze we're going to see in winter. Up, by the way, more than 90% year-to-date natural gas. At the bottom of the list, you're looking at retail sales. You've had earnings out from Inditex and H&M. Trevor and Leisure also down about 1%. That is how things stand 30 minutes into the trading day here in Europe. Francine.
Yes, so Tom, the European tech ecosystem is now worth more than $800 billion, with almost 50% of the value actually created in the last year. Now, that's according to technology advisory and investment firm GP Bullhound, which has been examining emerging trends in Europe's tech sector during the pandemic. Well, joining us now is Manish Madhvani, GP Bullhound co-founder. Manish, thank you so much for joining us. If you look at the European tech sector, there's some great unicorns. Sure, they become bigger. They, in some cases, make money, but you don't have the snowflakes of the world. You don't have the Google, the PayPals. What does the US do so well?
I think there's a time difference that you saw the US have these what we call mega rounds, kind of investment rounds of north of 100 million going into some of these companies. And they obviously have a larger home market where they don't have to span across all of the geographies we do in Europe. What we're seeing now, though, is that the European scene is really catching up fast. And you've got companies like Adyen, Spotify that are hitting that $50 billion mark. And then you've got companies like Revolut and Kazoo, Hopin that are creating incredible value over a very short period. And I think what you see is success breeds success. So we've obviously been championing raising the ambition levels across Europe, and we're partnering with Bloomberg with a couple of events that showcases this talent. And I think when we look at the trends now, it used to take 9 years on average to create $1 billion company in Europe. what we're seeing now in the past year, it's taken less than 12 months for some companies like Gorillas, which is in the food delivery market, Hopin and Kazoo, all closely behind. So the rate of acceleration is increasing really fast.
But Manish, how much of that is down to the changes as a result of the pandemic, but also just generally across the board inflated asset prices? How sustainable is this if those things start to change?
So the pandemic definitely accelerated the need for a few sectors. So food delivery, obviously, healthcare, and then edtech. But that's not going to go away. I mean, that demand, that consumer awareness has really been flagged, and people are going to continue to use many of those services in a dramatic fashion. There is a question on valuations, and there's been a huge influx of capital into Europe from the US and also from the traditional public equity funds. I guess what we're seeing is we've been trying to call the top of the market for a while. What you're seeing, though, is that capital is being put to really good use. So when we look at those companies, the rate of growth, the rate of revenue growth, and the unit economics that will eventually lead to profitability, they're all increasing at a dramatic rate. So some of these companies are growing by thousands of % a year. It's quite an incredible knock-on effect at the moment.
So, Manish, what does it mean for actually private equities? I mean, the private equity world is changing quite a lot, so I don't know how they interact with these different industries. First of all, you know, they're buying more, but they're also holding out for more. Is there going to be a buying opportunity where some of these companies are doing well and the ones that are not doing well will be bought out?
I think there will be consolidation. I think whenever you see these sectors get huge amounts of funding, food delivery is one that everyone's been watching with the Deliveroo's, the Gorillas, and so many new models, so much new capital. Not all of them can be winners. And what tends to happen then, similar to the digital music industry, where we had 7 or 8 key players, a few emerge as the winner, one or two will emerge as the strongest, and then you will see consolidations. The champions in UK, Europe, will start acquiring the weaker players. And that then accelerates the sector even more. It leads to dramatic growth, but some will obviously fail.
Manish, are you seeing any impact of the regulatory squeeze we're seeing in China in terms of money flows to Europe and prospects for European unicorns and startups? Is there an opportunity here to take a lead on what's been happening in China?
I think there absolutely is. I mean, you're seeing some of the flows coming into Europe and the US in quite an accelerated fashion since some of the changes happened. And I think that will continue to be the case where investors will look for safe havens.
Manish, talk to us about first mover advantage. You know, we were talking about Deliveroo trying to deal something with Amazon, but some of these, you know, is it all execution? So you have some big trends, but is it still an open playing field? So even if you look at some of the big trends that you've identified, you know, cyber, some of the things, for example, in online retailing and food delivery, is there still space for a third, fourth, or fifth entrant?
I think what you're seeing is that the sector becomes framed. So food delivery is a great example where a number of the players linked up to initially the takeaway stores. Then you saw the next generation of food delivery come, and they started linking up with the higher end restaurants. Then you saw the third generation, which linked with the really high end kind of Michelin star restaurants, and that requires a different service again. Then people started requiring supermarkets. Then people wanted things delivered within 10 minutes. Then people want things delivered within 3 minutes, and that will be the next evolution, going towards your groceries, cigarettes. So there's always room for improvement, and I think that's what we're going to see over the next few years. That a lot has been invested into these sectors. It's now about finding those niches and then delivering what the consumer really wants.
Francine is definitely lining up for that 3-minute delivery, by the way.
That's me, 2.5. I need it fast, especially for breakfast.
Matt, just before we let you go, very quickly, the conference today that you guys are involved with, the importance, what does it do?
Yeah, so we set up Investor All Stars 19 years ago, really, to raise the ambition levels and draw attention to the successful entrepreneurs and investors. And I guess what we've been seeing is those investors and the entrepreneurs are really scaling to new levels now. So it's what used to be a great return was kind of delivering 3 to 10x of the initial investment. What we're looking at now, with the judges, and the judges are many of the most successful investors in Europe, we're now seeing the top funds delivering between 100 times the initial investment and 200 times the initial investment. So it's been a staggering leap forward, and this is money that's being returned to the investors. So the event is the Oscars for the technology industry. It pulls all of the movers and shakers together, and we're trying to replicate and improve and eventually overtake that Silicon Valley ecosystem.
Thank you so much, Manish Madhvani there, GP Bullhound co-founder. Now, we're also getting some breaking news, I think, out of Ms. von der Leyen of the EU, talking about humanitarian aid for Afghanistan, topping that up by 100 million euros, and then working with the EU and NATO joint declaration before year-end. So she's just giving a press conference, Tom. We'll, of course, keep an eye on it.
Yeah, absolutely. Talking about that in need to support in terms of on a humanitarian level, the people of Afghanistan. It's going to work with the EU, NATO on a joint declaration before the end of the year. Also talking about climate financing, expect the US to step up and step in with additional climate financing. So just a few lines. We'll wrap this and bring you more and the most important, the most pertinent later as well. Okay, we'll get the first word news now with Laura Wright. Laura.
Thanks, Tom. North Korea has test-fired 2 ballistic missiles in Pyongyang's second major weapons test in less than a week. Japan says it detected 2 projectiles that landed outside its exclusive economic zone. The launch comes after North Korea said it fired off new long-range cruise missiles over the weekend. Voters in California have resoundingly rejected a recall of Governor Gavin Newsom. About 66% of voters in a special election responded no to the ballot question, asking if the Democrat should be removed. That's according to the Secretary of State's office, with more than half of the votes counted. Fueled by anger over pandemic restrictions and the direction of the state's policies, the recall attempt was only the second for a governor in California's history. China's embassy in London has condemned a despicable and cowardly decision to ban Beijing's new ambassador to the UK from Parliament. An invitation to him was withdrawn after criticism from British politicians sanctioned by China. House of Commons Speaker Lindsay Hoyle said the visit wasn't appropriate. President Biden has denied reports that China's leader rejected his suggestion of a face-to-face meeting during a phone call last week. Sources had told Bloomberg that Biden suggested the 2 leaders meet at some point in the next few months. Xi Jinping hasn't left China for more than 600 days, the longest stay-at-home stint of any Group of 20 leader. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura, thank you. Okay, coming up, history won't see current inflation as transitory. That is the view of billionaire money manager Jeffrey Gundlach. We'll discuss the lines from his Double Line webcast next. This is Bloomberg. China, if you look at US taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
It's a hugely consequential election. I mean, it's the first time in 16 years that there's going to be a new chancellor.
The CDU, of course, has been in free fall for weeks now.
Now we need the stable conditions. We can change our systems.
Just days until the election in Europe's largest economy, and the only certainty is change. An end to Angela Merkel's 16 years as chancellor. Now, Germany's major parties battle to succeed the EU's longest-serving leader. An election fought on pandemic recovery, climate policy, and foreign affairs. Whoever wins will oversee huge shifts as Germany's business community waits to see what the future could hold. And our special coverage of the German election continues today with Germany Decides Chief Executive Briefing. We'll be speaking to key figures from the German business world about what's at stake, including the leaders of Europe's biggest tech company and Germany's largest bank. That's coming up at 9 a.m. UK time, so 15 minutes from now, Tom.
Okay, very exciting. Absolutely want to tune in for that one. Okay, Jeffrey Gundlach, the billionaire money manager and chief investment officer at Double Line Capital, been weighing in on some key market themes. He was speaking in a webcast for his Double Line Total Return Bond Fund. Bloomberg's Ritika Gupta is here with a breakdown. Ritika, what is the main theme then to take away from the latest comments from Gundlach?
Yeah, Tom, I think one of the key themes really was about the Fed and its policy tools and how he says that they're distorting the market. And you can see this quite clearly with his classic copper-gold ratio that he refers to. Now, it's been historically a pretty good indicator of where Treasury yields will go. You see the two lines have pretty much closely tracked each other. But you see during 2020, the pandemic year, and on into this year, that there's been this really big divergence. And he says that the ratio is basically saying that Treasury yields aren't making much sense. They should be much higher. And so he's saying that this now is suggesting that the Fed really manipulating the Treasury market, according to Gundlach.
So, Ritika, what are his latest calls actually across assets?
Yeah, let's talk about some of his key calls. If we can flip up the board here, we'll start off with equities. Now, he says that U.S. outperformance relative to the rest of the world will eventually come to an end. So he said he sees opportunities in Europe. He's bought European equities for the first time in forever, he says, and he says that's been going okay. He's been avoiding emerging market equities, but he says he could reconsider that decision if the dollar does continue or break through that downtrend. And speaking of the dollar, well, he's warming up to it. He's now neutral on the dollar. We know Gundlach has been a long time bear, but he does stick to the bearish call on a long-term time frame. And then bonds, he's noted specifically that downward trend in that 30-year yield, and he really speaks to this idea of don't fight the Fed mantra here. And he's saying that, you know, if the Fed continues to step in and support the long end, then those yields on that 30-year, they're going to struggle to push past that 2% mark.
Okay, Bloomberg's Ritika Gupta there breaking down those comments. The latest commentary from Jeffrey Lungai saying that he favours European equities and that longer term he's bearish on the US dollar, how that plays into emerging markets. Of course, would be a positive if that comes to the fore. In terms of inflation, you're not convinced, it seems, around, well, there's a debate. The debate continues. It's not down to you, but what you're seeing, in terms of those prices, if it was, it should be. Let's hand it over. Move over, Christine Lagarde. What is your sense of where things stand? You weigh it up, US, Europe.
So first of all, let's remind ourselves, and no disrespect to economists, but I am probably going to beat up on economists in just one go, that it's been extremely difficult. Yeah, not the first time. It's just really difficult to predict, you know, how transitory inflation is, especially if you look at the old metrics. You know, anecdotally, if you pay a good 20% more than you did 3 years ago, 2 years ago, and actually the consumer keeps on buying it, you have absolutely zero incentive to then readjusting, you know, if the supply chain becomes easier for you, because it just means you make more profit. So I know that this is a very simple and kind of basic supply and demand question. My favorite author on opinion is John Authors, and he has these like great 5 charts looking at the August numbers in terms of CPI, keep the debt raging, or the debate raging about what happens to inflation.
So yeah, there's an assumption from some, arguably, that once you get the supply chain sorted out, then you're back to pre-pandemic levels of inflation, that things normalize. But you're pointing to, as well, inflation expectations. So even if the reality on the ground in terms of the data is different, those inflation expectations start to get baked in. That is a concern as well.
Yeah, and then the other concern is what happens with China. So you're the great expert on China. We look at crackdown. Now they're touching Macau. I mean, if you look again at you know, how quickly we can fix a supply chain. So every chip manufacturer says, look, it's going to be a longer delay than expected. And then the crackdown in China could affect, you know, other supplies that we haven't thought of.
Yeah, absolutely. We had the European Commission, of course, coming out saying they want to focus on the build-out of semiconductors here. China is battling its own price rises with commodities and trying to jawbone those lower, putting in policies as well to try and reduce those prices with limited impact. But the flow-through from China, where you're looking at PPI of around 9%, is something, of course, to continue to consider.
It's exciting. The markets are back. I feel like today there's quite a lot of volatility.
Buzz, there's a lot of news, there's a lot of headlines coming through, so there's some momentum there.
Finally, September 15th, and we're actually 14th. What day are we? September 15th, and we're away from the summer lull. Now, coming up, more on the markets after yesterday's CPI data. We also look at treasuries. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the Open. 52 minutes into the European trading day, and you can see a little bit of downside as markets trying to digest the U.S. CPI number and maybe some of the concerns over in China. Joining us now is Sven Ram from our Markets Live team. I know Tom wanted to talk about UK inflation. It's probably the most interesting one out there, Sven. How do you read it right now?
Well, we saw consumer prices climb more than 3%. And if you look at retail prices, which perhaps represent the more important number for investors in inflation-linked bonds, we saw a surge of almost 5% All these mean that the markets are bringing forward the prospect of a BOE rate hike sooner rather than later. Indeed, if you look at the 2-year gilt yields, Francine, we are already at 25 basis points. So the market is already effectively where the BOE could be in the first half of 2022, assuming the central bank will go with a 15 basis point hike to start with. And that's the biggest takeaway. The markets are already where the BOE wants to be in a few months down the line.
Okay, Ven, just very briefly then, your views on where things stand in terms of the taper timeline on the back of the CPI out of the US.
I don't think the CPI numbers that we got yesterday suggest that there's going to be any delay in taper because the Fed is not going to react to the one-off prints that we saw. Even at current levels, the inflation is elevated, and I don't think it puts a pause on taper unless we get a very weak, extremely weak numbers on the labor market going forward.
Ven, thanks so much. Ven Ram there from our Markets Live team. So that's it for the European Market Open. Our Germany Decide special is next. And of course, the focus, though, Tom, on the markets is very much on China and very much on some of the stocks on the move.
Yeah, what happens in China, major implications for German corporates, of course, and how that plays into the politics in Berlin. Plenty more ahead. The markets, by the way, the Stocks Europe 600, currently down 0.2%. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's a hugely consequential election. I mean, it's the first time in 16 years that there's going to be a new chancellor.
The CDU, of course, has been in free fall for weeks now.
Now we need the stable conditions. We can change our systems.
Just days until the election in Europe's largest economy, and the only certainty is change. An end to Angela Merkel's 16 years as chancellor. Now, Germany's major parties battle to succeed the EU's longest-serving leader. An election fought on pandemic recovery, climate policy, and foreign affairs. Whoever wins will oversee huge shifts as Germany's business community waits to see what the future could hold. Everyone, and welcome to Germany Decides, the chief executive briefing. With just 11 days to go until a monumental election in Germany, we're going to speak to 4 key leaders from the business world about what's at stake in this election. Now, do ask us a question if you're following on our webinar or on the Bloomberg terminal. You can always tweet us also at Bloomberg TV. Now, we have a fantastic panel of guests joining us. I'm excited. Speaking for the next hour, Christian Saving, starting his career at Deutsche Bank in 1989 as an apprentice. He's now been the chief executive of Germany's largest lender since 2018. Also joining us, Professor Veronica Grimm, one of the member of Germany's Council of Economic Experts since April 2020. It's the country's most important advisory committee for matters of economic policy. Also, Christian Klein, starting at Europe's largest software company, SAP, as a student back in 1999 and has risen to become one of the continent's youngest chief executives. And Joe Kaiser, he is the chairman of the supervisory board of Siemens Energy and the incoming chairman of Daimler Trucks after a storied career in German business. So thank you all for joining us. We have 1 hour and we're going to talk about Germany. Christian Saving, let me start off with you. Your stewardship at Deutsche Bank has really been known for restoring stability and cost cutting after some tumultuous years. What do you need from the next government?
Well, first of all, thank you very much for the invitation. It's good to be with you this morning. Look, I think what we all miss a little bit in the whole election campaign is a clear outline of a European and German growth agenda for 2030. I do think that Germany has shown actually a tremendously good trajectory, in particular between 2010 and 2020. We benefited very much from our export industries. But we also know that even independent of COVID, the world is changing. The value chains are changing. We see geopolitical tensions, and therefore I do think that what we need to now focus in order to maintain the growth, in order to maintain our competition and our competitive standing versus the US, but also in particular versus China, we need to have a clear European plan. That means one European home market for our corporate companies, for our industries. And I think in this European market, we need to put very much focus on the topic of sustainability, because I think that Europe has actually leading technologies that we can be at the forefront of that development. And if we get this right, combined with the Capital Markets Union, where we then also have the financing needs in place, which will certainly derive from all the investments needed for the topic of sustainability, Germany can actually be also in the next decade a leader in Europe and as such a competitive country globally. So a clear economic agenda, is that what I wish for?
Yeah, and that's exactly what we'll be talking about, you know, Europe, China, Capital Markets Union, and of course sustainability. Professor Grimm, your research includes market design, behavioral economics, energy markets. Is Germany really at the moment at the crossroads economically after 15 years of Angela Merkel?
Yeah, I think this is a very important election. We are in the middle of a deep transition due to everything we have to address in the context of climate change. We have challenges concerning, for example, our pension system, and there's a huge debate how we will manage to take these challenges. I think it is true that we have to strengthen the EU's competitive position and to use also all the funds that have been set up now in order to cope with COVID and to recover, in order to strengthen the EU competitive position in the world, because there will be a deep transformation in our whole energy system, and this is a very important topic that is covered a lot in the German electoral debate. I think the debate is somehow too much focused on national thinking, but this might be due to the fact that there is also a change. Chancellor Merkel will not go forward anymore, and there is now the choice between three possible successors. So it's much about persons, the election.
Yeah, and we'll talk, Veronica, about some of the candidates shortly. But Christian Klein, you've overseen a strategic overhaul at SAP to focus more on emerging areas of growth like cloud computing. What do you think the state of German business is right now?
Yeah, first of all, I guess it's fair to say that under Angela Merkel's leadership, we achieved a lot. The unemployment rate is an all-time low. We also created over 6 million of new jobs. But clearly there is upside when we look at the digitization of Germany, but also Europe. I mean, my wish also for after the election is that we have a digital ministry, which also then results in the fact that we have 5G networks, not only for Germany, but across Europe, that we drive the digital transformation agenda, that we digitize, our public sector. Because especially now in the pandemic, we have seen how important it is that digital technologies make not only our enterprises more resilient, but also our public sector. And last but not least, Christian already mentioned it, how important sustainability is. But also in order to invest into sustainability and drive the agenda to become more carbon neutral, companies also need the money to invest. And that belongs together. And we can only be competitive also here in Europe if we also transform our industry. So these two things belong together. And this is why where is my wish that the new government really drives the digital agenda even more so in the future.
Joe Kaiser, you've had a famed career in German business, overhauling the corporate structure, for example, at Siemens. I mean, what do chief executives want right now? What do you think will decide the election?
Well, I mean, at the end of the day, the people will decide because they are going to vote and there will be majorities and then there will be coalitions. So that's the democratic process. Needless to say that this time it's a fantastic opportunity to bring our country into a more transformatory level. But as Christian said in the beginning, so far we haven't really discussed the top lot about content. I believe what we need, what the people, what Germany needs, is that we do have a comprehensive business plan for the next decade on how we are going to be inclusive of market economy, in a transformatory environment, sustainability, and how we can make social inclusion a reality. I'm saying that because Germany has been doing really well in the last decade and the decades before. However, most of the German key industries, such as the car makers, tool making, healthcare, and others, are undergoing the most fundamental disruptive transformation in history. We call it the fourth industrial revolution, or Industry 4.0, or Internet of Things, you name it. So that needs a business plan, because there are conflicting topics there. Digitalization will boost productivity, will boost the time to market, means innovation. However, it will also divide society, because thousands of people, if not millions, will either lose the job or have to do different things in their job. So we need to have a plan, and that plan is missing. Now, obviously, it's election time. People are promising all kinds of stuff to get the vote. But the moment we have a coalition, we need to have a plan for the next 10 years on how we are going to be as successful as we used to be in the last 10 years. Otherwise, I'm afraid we are going to lose traction. And, the world will look at Germany, but the world is not waiting for Germany.
Joe, you talk about the business plan, so we'll get onto that in a second. But let's also take a look at the candidates vying to take over from Angela Merkel. The three parties that have been leading in the polls now facing off the debates are the SPD, Angela Merkel's CDU-CSU alliance, and the Greens. Now, the current finance minister, Olaf Scholz, leads the center-left Social Democrats. Scholz has really transformed his profile over the past 18 months to become the front-runner to succeed Angela Merkel, as he's been the face of the pandemic stimulus programs. Now, leading the conservative bloc is Armin Laschet. He's the state premier of Germany's most populous region, North Rhine-Westphalia, but he's suffered from high-profile gaffes during the summer flooding and has struggled to energize his party. And then leading the Greens is Annalena Baerbock. After her nomination as candidate for chancellor, the Greens were at 1 point leading in the polls, but despite the prominence of climate issues in the campaign, they've since slipped back into third place. If you look at some of the concerns, and Joe Kaiser was talking about the business plan, the energy and, of course, labor costs are among the highest in the world. What do you see, Christian Saving, as the #1 priority for any coalition? I don't know whether we need to start looking at best case scenario for business and worst case scenario, but it's very clear that there's something that needs to be re-energized.
Well, I think it's the overall discussion. What comes first? Is it kind of earning the GDP and increasing the GDP, or it's all about reallocation and distribution of money? And I do think that in case we want to maintain, and that must be our wish for Germany, to maintain the system of the so-called social economy, which we drive here in Germany, we actually have to get back to the question, how can we ensure growth in this country over the next decade, knowing that the fundamentals in this world will change from a value chain point of view and so on. And therefore, I think the first thing we really need to focus is, again, how can Germany ensure that there is GDP growth in a good way and in a competitive way over the next 10 years. Therefore, we need to invest. In order to invest, you need to have 2 or 3 things. A, we should really reduce, in particular in Germany, the way of bureaucracy. We have far too much bureaucracy in Germany. We need swifter and more decisive action and decisions, in particular also by the public authorities. Secondly, I think Germany cannot go for any kind of tax increases. I know that the last 1.5 years were burdensome on the public debt. Nevertheless, Germany fared well, and I think we have to do everything, not in order to increase tax. We already have in Germany, compared to other OECD countries, the highest tax ratio, and therefore we should not further increase, but actually leave the power and the capacities within the private sector to invest. Thirdly, given the investments needed for the sustainability change which we will see and the transformation which we see over the next 10 years, we need to actively work that we get the investments into Europe, the investments into the country. And we can only do that with an open and deep capital markets like we see it in the US. If you work on these 3 items, I do believe that despite the fact you are rightly quoting out that Germany has high labor costs, that we have high electricity costs, actually we will work with those investments again on our technology, we will work on our efficiencies, and that was the way Germany always overcame the structural issues of higher labor costs, and that's what we need to maintain, and hence the focus on growth in the next 10 years. And what Joe is saying, having a clear business plan for that, for Germany and Europe, is essential to maintain the competitive situation we're in.
Christian Sewing, who's the best chancellor for this? You've laid out the concerns, you've laid out actually solutions also that you would put in place for the next government. Is there a coalition, is there a chancellor that would do a much better job with this?
Look, first of all, and in my view, that is an issue in Germany for the time being. We are too much focusing on individual people. I think we should focus really on the underlying theme and priority of the parties. And there, you know what I just said, less bureaucracy, a clear tax system which is not further disadvantaging us. I do think that we need a government which has this economic agenda on top of its priority. And in this regard, I have to tell you, we have 3 candidates who are debating on TV. Actually, in my view, there is a 4th party missing in that debate, and that's the Liberal Party, because there is obviously a clear agenda for growth, and therefore I do think one has to go look into the underlying programs of the party rather than only focusing on the candidates. Each of those candidates, to be very honest, has his or her merits, absolutely. We have somebody who has shown in North Rhine-Westphalia that he can transfer a kind of an old economy into a new economy. We have seen a finance minister who has lots of experience. We have a Green Party who stands a lot for the new generation. But what you need to do is you need to look into the underlying themes of the programs of the parties, and then you get, in my view, the right answer when it comes to the top priority, and that is economic growth.
Veronica, I mean, it seems that German voters at the moment are really facing a bewildering array of possible coalitions. Is there going to be tactical voting? Again, this feels like an election where anything could happen, really.
Yeah, that is very difficult to say. I think basically the topics are on the table, and it is important to pursue a certain agenda that that enables us to transform our whole economy towards climate neutrality. And the proposals are on the table. I think in the past there have been quite ambitious initiatives. The recent climate laws, the hydrogen strategy that Germany and the EU pursued. But now we need to get into the making to strengthen the incentives for climate neutral business models. We need to build up infrastructure and reduce bureaucracy in order to speed these processes up. And all the parties have these proposals in their programs, but they have in some dimensions quite different perspectives, how really to get into this making. Whether people vote strategically, it's very hard to say. The polls are interesting, but the polls are not all. In the end, it will matter what the people are deciding.
Mr. Klein, I was reminded, of course, preparing for this, that SAP was founded in 1972 by 5 entrepreneurs who had 1 customer. What kind of advice would you have for someone who wants to break through in that space, visionary software, for example, specialists in Germany in 2021, and how can the next government help that person?
I mean, for sure, what we also have seen in Germany during the pandemic, that there's upside in the digital education. I mean, when you look at across our states, a lot of kids really suffered from the lack of quality of our infrastructure, digital infrastructure in this country. And this also comes back that we need in Germany a digital ministry who actually leads to the fact that we can also educate our kids in a digital way, that we change our curriculums, because Joe mentioned it, all of our leading industries are undergoing a massive transformation. I mean, look at the automotive industry. A car in the future has much more software and technology embedded as in the past. And we need to equip our next generation with exactly those skills. That's the strength of Germany. This is how we're going to stay competitive. So, and this is the one hand side. The other hand is also that we create incentives for entrepreneurs, that we also make sure that here in Berlin, in Munich, in all of our communities, that it's also able to find enough money to actually fulfill your vision, to go into new businesses and to allow our people to also grow the next generation enterprises like SAP. And this is also clearly where we have upside, better R&D, better incentives for R&D, better incentives for our startups community in this country.
Joe, I know you've been frustrated in the past, you know, or you've urged policymakers to focus long-term instead of focusing on the next election. Is there a danger that also because of the pandemic, because of supply chain issues, because of the Delta variant and possible other variants, you know, all the politicians in Germany that will come into power will be too short-term, and what can be done about that?
Well, that's what I was saying, that we need a 10-year plan, and typically, you know, legislation or the parliament takes 4 years. The first year is to get to know each other. Then we have 2 years left to get something done, and the fourth year is already election campaigning again. That's not what innovation cycles and long-term planning is about, what companies do. So that's why we need a real business plan for our country. And a business plan for our country will definitely not just include how can we foster growth in Germany. That's not on the agenda, because really, honestly, or it should be on the agenda, but not in the first place. But look, in Germany, no matter whether our GDP grows 1 or 2 or 3%, all those technology matters, digitization, transformation, that will actually, you know, the fourth industrial revolution, that will offer productivity potential 10, 15, 20%. So no matter what we do in Germany, we need to get our export model going. So that means foreign policy in Germany is foreign economic policy in Germany. And that, having that in mind, we need to take it one step up and say, okay, fine, what does it take to make the export model, you know, continue into the next 10 years? First is innovation, definitely innovation. And that's what we can do as a country, as companies. That's on our side, foster innovation. But then we also need to go look, what do things like in Southeast Asia, predominantly China, secondly, United States, what does the decoupling do to Germany? You know, if a decoupling forces localization, then our country looks pretty dark in the future. So we need to actually step up into a European foreign economic policy, drive that so that we are on equal footage between China, the United States, and Europe if it comes to global trade rules and other things. So that's, I think, what we have at stake. German foreign policy is foreign economic policy, really important. You asked about the polls and the potential coalitions. Look, the pollers have not been exactly known in the past of being accurate. So I would say nobody knows. There's about 25% of the German voters who are not yet, you know, decisive on what they want to do. For me, I believe the most likely outcome is potentially this, what they call the traffic light coalition with the Social Democrats, the Free Democrats, and the Greens. Obviously, now neither the Social Democrats nor the Greens will let's say that they cannot do the rhetoric green because it's a tactical issue they have to keep till last minute in order to make the Free Democrats willing to a coalition. So time will tell. But what I'm trying to say is, no matter what government we have, we need to have a long-term plan, including market economy, fostering innovation, including sustainability, which I think is very, very attractive because this is about innovation and global pollution reduction. And thirdly, this is really, really important, how can we include society and make sure that the society does not get further divided, because we do need social freedom and social peace in order to make matters work.
Joe, let me remind all of our viewers far and wide, actually, some of what the economic facts for Germany. Angela Merkel was a stable presence overseeing the German economy despite being in charge during two major recessions, the global financial crisis and, of course, this pandemic. Now, this economic shock from coronavirus upended years of German fiscal policy, ending Merkel's balanced budget regime to unleash hundreds of billions of euros in aid. Now, debate rages among the parties over the emphasis on public spending and investment once the crisis is over versus returning to balanced budgets. Christian Saving, I want to spend a bit of time, looking at this, exploring this with you and what kind of banking industry Europe and Germany needs. How different will banks look in 3-4 years? I know you've called for a capital markets union, a banking union. What happens if we don't get it in our lifetime?
Well, we will get it in our lifetime. So I'm that clear. It must happen. It will happen. And to be honest, if you look across the various parties, the democratic parties, if you look also into other European countries, the capital markets union will come. The question is when and how swift does it come? Look, to your chart, which you just showed, I do think, and praise to Germany. They have done very well over the last 10 years, in particular with regard to debt to GDP. I mean, in this regard, we are leading. But we also understand, and that must be the understanding of any new government, that simply the spending, which we had to do through the pandemic, and I think where the government actually reacted very well and very swiftly, we need to stop that. And that is also something which the society needs to understand, that the expectation that the country will take care in terms of distribution, a new deficit budget, must come to an end. And therefore, the key question is, how can we incentivize and how can we make it happen that private investments are actually going up? And here I come to the point you are making. Here it is the way of the capital markets union. This is how can we better canalize and actually allocate investments into Europe, into Germany. And for that, we need a deeper capital markets. And why? Not only because public spending should be obviously limited. And I think we really need to come off the drug which we have seen for the last 1.5 years. But the real issue is, if you look at the investments for sustainability over the next years, it's per year 2 billion euros just for the European Union. And that cannot be done via public spending. That cannot be only done via the balance sheet of the banks, but it must be done via a deeper and bigger capital markets. That's what we need, and that actually gives us one more chance. Because if you have a deeper capital market, this also provides the chance that we have investments into venture capital. That's exactly what we see in the US. And that also means that the chances to invest into new technologies, into new business models, are higher to come to Germany and to Europe. And therefore, I do believe we need to understand that we need to reduce the public spending, the deficit making, move into the private investments, private bet, and therefore into the capital markets union. That's on the agenda which we need to now work on.
But Christian, is there a danger that actually after, we've also had Brexit, which means that Germany doesn't have the kind of sparing partner that it's had in the past when it comes to regulation and banking? Is there a danger that whoever's in charge next doesn't focus on this and so kind of leaves German banks to wither away?
Look, I do think, first of all, it's our role to make it very clear that we as banks need a competitive environment. We have done that. And I also would like to say that over the last 3 or 4 years, also with the finance ministry we have here in Germany, we got the support which we needed in order to make sure that the financial industry is at the core of the overall economy in Germany and in Europe. And I think we have shown it through the pandemic. I'm really glad that during the pandemic, banks were part of the solution and not part of the problem, like in the financial crisis 2007, 2008. And that's our expectation, that we maintain that. For that, we need level playing field. We need to make sure that issues, as you're just saying, that, for instance, the introduction of Basel IV is kind of more tailor-made for the underlying industry in Germany. You know that our backbone is the Mittelstand. For that, we need tailor-made regulations in order to stay competitive. But I have to tell you, I do think that the German finance ministry, also regulators, understand that if we now push it a little bit more and we get even a better grip on this, while at the same time the banks are doing the homework, which we have done, and further increase the trust in our robustness, I do think that we will get the support that everybody knows banks are key for the transformation for the next 10 years. So I'm optimistic here.
Veronica Grimm, do you think austerity should be history? Joe, jump in and then a question. Yeah, go ahead.
Because, I mean, Christian cannot really say it. I mean, not all the banks have done their homework in Germany. And firstly and secondly, there has been a lot of headwind for the banks in Germany, you know, to get on a level playing field with the competitors in Europe and elsewhere in the world. Christian has done a fascinating job getting Deutsche back into play. But I really, really do wish that the new government in Germany understands better what needs to be done to help the banks rather than to put a lot of stuff into their way of becoming a reliable long-term partner to the industry.
Joe, are you suggesting consolidation or are you just talking about regulation?
I'm just saying that, as I said, Deutsche Bank has done a fascinating job to come back from a pretty screwed up bank to a trustful long-term partner again, and I really, mean what I say, and that's been the leadership of Christian. But by the same token, there's been a lot of headwinds, in Germany for the banks to get their stuff together. I'm not saying or suggesting there's got to be consolidation. I'm suggesting that Germany and the German government looks more after their banking as they look after, let's say, the Mittelstand or the industry, because we do need to have reliable banking as a prerequisite, as a foundation of doing business, giving credit also to venture capital and the likes. And if you have to put a lot of equity, on your balance sheet to support venture capital and startups, it's not going to be that easy. So we've got to have, a lot of reform taking also in the financial sector to foster innovation, to foster entrepreneurship, so that the banks can help and be an active partner in bringing that up to a level which is known, let's say, in the United States or elsewhere in the world.
Yeah. Veronica Grimm, I see you nodding, so maybe a comment on the banks, and then I also want to ask you whether you think austerity is a thing of the past or should be a thing of the past.
I think it is very important to mobilize private investment. So in our economies, around 84% of investment is private investment. So the private sector will be key for the transformation for that reason, because it's just the largest part of investment that's being taken. And the second issue is that the German and the European industry is in an excellent position to provide technologies and solutions for sustainable digitalized economies worldwide. But currently, I think the state has to do a lot of homework, because the regulatory environment is not really fostering innovation in the way it should be fostering innovation. One issue is bureaucracy. The other issue is that the relative prices are not the right ones. So fossil business models are still much more profitable than climate neutral business models. And there is a lag in building up infrastructure. And this is something, of course, the state has to coordinate and to plan, but not to pay entirely. So I think the state should do its homework, adapt the framework conditions under which innovation and success of the economy can take place. But I also think that the state should not weaken working effective fiscal rules, because that comes with a danger that the public money is not spent for what we think it's spent for. On the one hand, there might be mechanisms that, in the end, for example, if a reform of the pension model is delayed further, and other issues. And the second thing is that the more the state plans to decide, the more difficult it becomes, because there's no consensus in which way, which is the transformation path, how the economies should actually transform in the direction of a digitalized and climate neutral economy. A lot of technological process will determine what are the best solutions. And this is something that is better organized in a decentralized way, enabling firms to contribute and to find out the best solution. And it's not oriented on what, for example, Germany needs, but it should be oriented on what the world needs, what solutions does the world need, because we are an exporting country, so we have a huge export orientation, and this will also switch. We will not anymore export fossil cars, for example, but we will have to switch this, and I think it is very important that we create a framework that enables firms to go in these directions and to be successful in future markets.
Veronica Grimm, let's talk a little bit about climate. So it's been, of course, one of the key issues in the election with devastating floods in July, just the latest reminder of the risks that countries face. Now, here's what the candidates have been saying on the issue.
We should be as successful as we were in the 19th century with this industrial breakthrough. And this could be the case with electric mobility. This could be the case also with renewable energies. And it will be a decade of high private investment and high public investment.
We have to make sure that the private capital that is at our disposal in Germany is also mobilized and made available.
If you restrict investments in a crisis, you really get to the edge of the existence of a social welfare state with dramatic consequences. And though far within this crisis, we have to invest into the future.
Many people are calling for climate neutrality, but I want us also to still be an industrialized country in 20 or 30 years, to still have industrial jobs.
Those were the candidates on climate. Now, some of the traditional German industries have a large CO2 footprint. So, Christian Klein, if we look at some of the sectors that will see the deepest, of course, disruption as the result of these ambitious goals, how difficult will it be for the next government to manage the transition?
Yeah, indeed. That's actually a very valid point. I mean, these days we see that governments across the world, but also, enterprises have really come out with new sustainability goals. But actually, it's also part of the truth that we are really also today lacking the transparency. How high is actually the carbon footprint, for example, of an electric car? Because the carbon footprint doesn't only happen within the four walls of a car manufacturer. It actually, it's created across the supply chain. And this is why, and this is also a unique opportunity for Europe to create strong B2B platforms where we not only connect the car manufacturers with the suppliers, with the logistic providers to really create a digital supply chain and build more resilient supply chain, but also to track and trace the carbon footprint, for example, to have this transparency and then to take tailored action. And this is very much needed. And that also then leads back that we really need to lead with our digital agenda to create this B2B platform. Just look at the power of all the B2C platforms coming from the US. And we in Europe, we have a very strong car industry. And now we need to use this expertise, come together on this platform, share data, digitize our information flows, and with that also make sustainability more reportable. And with that, for example, in the case of carbon footprint, create more transparency and take decisive action and not only put new targets out there.
Joe, Tesla is also building a factory really on the home turf of some of the biggest car makers in the world. Who will lose out in this push for green?
Well, look, time will tell. Obviously, Tesla has had the benefit that it was a greenfield approach. They had no legacy. The German car makers and of course others, they had the legacy of having combustion engines, and as the profit makers, and now they need to transform into a totally new way of mobility. And somebody said it earlier, the car of the future is an operating system on wheels. That's in essence what it's going to be. And so therefore there will be a huge transformation. And, for example, the German car makers, they need to manage that transformation out of a legacy, which is always hard if you have a disruptive transformation. So that's why I believe there is a lot at stake. We've seen some, I believe, some very good movements on the car makers in Germany on their targets, but time will tell on how they are going to do this. So therefore, I think the race is open on that matter, and may the best team win. But in order to make the best team win, we need to have a level playing field on the rules and regulations on a global scale. That's really important on the whole climate matter. I'll give you an example. Germany has about 800 megatons of CO2 emission, okay? The global CO2 emission is 40 gigatons. So that means Germany has got 2% of the global CO2 emission.
Yeah.
Now, if you focus all your policy making on getting, let's say, from 2% to 1% of global emission, that's not going to work. That's not going to cut it. Because if we, it takes 4 or 5 years till we get there. In the meantime, Indonesia, Philippines, all the Asian developing economies, potentially Africa, they will by far emit more than this 1% global thing. So that means the key decisive element of German industry is how can we push innovation as much so that we can export goods and services which help the greater good of CO2 emission globally and not just in Germany. And that's missing in the German political debate. That's why I come back to my topic. We need a business plan over 10 years, not just 4 years, not a political program. We need to have a long-term plan, including innovation, including the German export model, including a European approach to global trade, and of course, last but not least, including the social divide of an elderly population in Germany.
I'm getting quite a lot of viewer questions, actually, on climate change. Veronica, maybe this is one for you. In the face of the current energy crisis, how sensible is it to turn off 3 of Germany's nuclear power plants this year?
I think we have to accept that Germany has decided it this way, to turn off nuclear first and then to exit coal. It could be a difficult debate in our society to open this up again. So I think we should go forward. We should go in the direction to enable our industry to develop the solutions that enable countries worldwide to become climate neutral. That should be the agenda. That's a very globalized, very international agenda. And this is on the one hand, a policy that should focus on the industrial development, on the innovation, and on the other hand, we have to cooperate. We have to initiate global cooperations. At the moment, we import 70% of our primary energy in the form of fossil fuels, gas, oil, coal, and this will change within the next decades. We will import electricity on the one hand, very likely, but also other energy carriers that are based on hydrogen, and these will be a completely new supply chains that we have to set up, cooperating with countries, which allows us to diversify our energy dependency, to just set it up in a new way, but which allows us also to provide all the technologies that are needed to produce hydrogen and synthetic energy carriers, climate neutral synthetic energy carriers worldwide, to transport them to Europe or to countries worldwide. And this will be also a huge technological project that we should foster. And these things are starting out. I think that's the agenda that we should pursue, and not going back into a debate whether to prolong nuclear energy or, of course, we should exit coal earlier than planned. But I think this will happen anyhow due to the higher CO2 prices that we already observe.
Christian Sewing, I have to ask you, of course, about some of the probes, relating into financial services, relating to asset managers. How much of an impression did the DWS probes make on asset management industries as a whole? And what are the wider ramifications when it comes to green or greenwashing?
Well, first of all, I mean, if you ask me directly, DWS brought out a clear statement rejecting all the allegations, clearly referring to the annual report. And I have to say, with the business development I have seen there, actually also now with analysts coming out, looking at DWS, looking at these items, actually supporting DWS and further recommending it, I think this is a very strong statement. Now, we all have to take into account, and that is not only for asset managers, the whole sustainability and ESG, and in particular taxonomy, is an evolving issue where also we learn and develop from month to month. And in this regard, I think we all, banks around the world, asset managers, work on a taxonomy, have high standards. I mean, if I look at Deutsche Bank, if I look at what we are doing to categorize all the transactions, to have a separate and independent review panel in order to review individual transactions, whether this falls under sustainability or not, that is huge work. There is very diligent work, and therefore I feel comfortable that we go into the right direction. But as we said on our Sustainability Day in May, we are coming actually from ambition to impact. So it's a very developing topic. Let me say one word to sustainability, because you had another graph out there where you said the individual parties by which year they would like to be carbon neutral, 2045, 2050. I think it's very important that on the whole journey, and Joe was referring to that on the whole journey to carbon neutrality, you need to take the people with you on that journey. And therefore, when you think about ESG, it's of course the focus is on E, but let's never forget the S. And that is the social impact of that transformation, in particular for parts of the industries which are not yet obviously carbon neutral. And therefore, we need to have not only the business plan Joe is asking for, but a clear transformation timeline over the next 5 to 10 years in order to have also the people's backing that this way it's worth to go. And that at the end of the day, this way is not all about risk, but it could be an opportunity for Germany and for Europe. And therefore, whenever we talk about environment, let's also talk about the S part, because the one does not go without the other.
Yeah. Okay, let's also talk about China now. Foreign policy, and in particular relations with China, is a key issue, of course, for the next government. Germany's export-driven economy has seen increasing trade with the world's second largest economy, but reliance on China raises the risk of being caught in the middle if tensions between Washington and Beijing escalate again. Christian Saving, when you look at what Angela Merkel tried to do, it's a bit of a balance with China, sometimes standing up to Beijing a little bit, but at the same time cultivating trade links to benefit the German industry. Do you see China more as a threat or an opportunity?
Look, to be very honest, I mean, as you rightly says, we are somewhere in the middle. Both markets, the US and China, are key for Germany. It is both markets are an opportunity for Germany. And therefore, I have to say the politic and the strategy and the way, in particular, Angela Merkel worked with China over the last years, and I had the opportunity actually to join her for one trip, is exemplary. I really do think she tried to find the right balance. On the one hand, clearly calling out those issues which are not in line with our values, but on the other hand, also trying to foster our business relationship. There is one other point, and again, we said that before. We need China, we need the US. And I think for that, in order to make it even more forceful for us, I think Europe needs to have one bigger home market. If we can actually have one European agenda, and with that we can also portray that better to China as well as to the US, it is of the benefit for whole of Europe. And therefore we shouldn't argue from a one country perspective, but actually use the power and the capacity and the capability Europe has.
But Joe Kaiser, how much more difficult will this be, this balancing act, right, for the success of Angela Merkel, given that the US, both under Trump and Biden, has been much more aggressive towards the country?
Well, look, I believe the dialogue with China and other complicated economies, let me put it this way, it's been probably one of the biggest achievements of our current Chancellor, Angela Merkel. She's always been a strong advocate about talking to each other and not about each other. So she's been going to countries and address the issues, but also been looking for solutions altogether. And as Christian Sewing rightfully said, you know, Germany, as much as I love my country, is way too small to play on an equal footage with China and the United States. So we need to have a joint European foreign economic policy, a set of rules, so that we can discuss on level with the other two big powers in the world. Now, obviously, if it comes to China and the United States, I mean, look, the US currently is the #1 economic force in the world. A lot of people say China will take over in a few years. So if you're #1 in a field, you don't like to be #2 tomorrow. So there is obviously a competition about the #1 in the world. That's just, we don't need to be naive. And the issue is we must not be caught in the middle. And therefore, dialogue between the EU, China, and the US about global trade rules is essential in nature. Because if we really get into an issue where we, see a continued decoupling between, let's say, the China-led world, and there's a lot of countries, in the Belt and Road Initiative, and the US-led world, this is not going to be good, because that decoupling means for global companies or export-oriented countries like Germany that we need to further localize. So that means, for example, Siemens or SAP or others, or Volkswagen, we need to build factories in China and we need to build factories in the US. Right. So that means localizing into the markets. We are Chinese, we are US. So that's how big companies overcome the decoupling. Now let me think about the German Mittelstand, right. A very, very important area. They can't afford to build more factories in China or the US. So they're going to be caught in the middle by that decoupling. So priority #1 of a new German government is to foster the European foreign economic policy and find a global set of trade rules on how we can overcome the competition between Buy American and invest in China.
And that's, Joe, exactly where I wanted to go, right? Europe is not, doesn't have Apple. We don't have Google. We don't have Alibaba. Christian Klein, do you, worry that actually the region, and therefore Germany, will fall behind, for example, in future technologies like AI?
No, but Joe said it absolutely right. At the end, also we in Germany rely on a strong Europe. If we coming together in Europe and build strong B2B platforms, we can actually set a standard in the automotive industry. If we are now, building, for example, we just founded Catena-X with Volkswagen, with Mercedes, with BMW, with Siemens. And when we are setting this standard and building this digital supply chain, I mean, the companies in the US, they will join, and we have the opportunity, but only if we come together, as one in Europe. And then on top, I mean, we are running large multinationals, and in the US, they are doing business in China, and vice versa. And of course, also here in Europe, we are doing a lot of business with China, and of course, also with the US. And with the current political tensions actually increasing, of course, this is imposing a lot of additional burden in localization requirements, in data isolation. And at the end, there is no win-win. And this is why I can also only applaud our Chancellor Merkel, who really always tried to build bridges and not going back into isolation, because there is no winner in that. And again, for us in Germany, it's so important that we are tackling this as Europe, as really one region.
Yeah, Veronica, I guess $1 million question is, what's the best way to tackle, though, the competitive threat from China? Is it, for help from the state to confront this threat, or Washington-style free market consensus?
I think it is definitely strengthening the European Union, the European single market, the European capital markets union, and to make the EU a strong economic area. The stronger Europe is, the more likely it is that we also win others in order to go in certain directions in a cooperative way. For example, in climate in climate protection, cooperation will be key. So we have to initiate initiatives, and Angela Merkel did this from the beginning of their chancellery to try to strive in this direction. We have to initiate initiatives for global climate cooperation. This will make it more easy for everyone to promote technologies to transform the economy. I think it will be a little bit difficult to decide on what we cooperate. A common CO2 price would be desirable, but I expect that the US will not introduce the CO2 price in the near future, but we could also cooperate in other ways. So I think cooperation in climate protection will be key. And then there will, of course, be a competition between the different regions who succeeds in development of technologies, who succeeds economically, but this interplay of cooperation and competition will be key in the future as well.
All right, well, thank you so much for a very insightful panel. I wish we had more time, but that was the hour. Thank you so much to our guests, Christian Saving, Professor Veronica Grimm, Christian Klein, and Joe Kaiser. Now that's it for Germany Decides, the Chief Executive Briefing. Our special coverage of the German election continues, of course, on Election Day on Sunday, September 26. We'll bring you live coverage as polls close and then results start to come in. Coming up, we'll have plenty more on market coverage. Of course, we'll also look at the German election as it stands with the Commission. We've had some updates also on energy consumption. This is Bloomberg. Great.
It's Wednesday, September the 15th. Our top stories today. Double trouble for China. The economy is being hurt by government coronavirus controls and tight limits on property financing. Back at work, Congress returns from vacation to face a wide range of battles, everything from President Biden's economic agenda to a potential government shutdown. And on a record run, natural gas prices in Europe just keep rising. We'll look at what is to blame. Good morning from London, everybody. I'm Anna Edwards, in for Francine Lacroix this morning. Matt Miller is with me here in London for a change. Kaylee Lines is with us, of course, as usual, over in New York. And Kaylee, what are you seeing in these markets? A lot of talk about inflation over the last couple of days, where you are and where I am. But it was the Delta impact on the Chinese data really driving the Asia session.
Yeah, absolutely, Anna. It was a deeply red session in Asia overnight. Sure, there were some exceptions, the Kospi and South Korea being one, but you had Japanese equities lower, and both Hong Kong and China fell by more than 1%. As you said, weakness in the Chinese economic data for August. Retail sales only up 2.5%, well short of the 7% estimate. You also had a contraction in construction investment. So it really shows the restrictions around COVID-19 and property regulation are having an impact. And speaking of regulation having an impact, I would point to Chinese tech stocks lower for a third day in a row. The HS Tech Index down about 3% in the overnight session. And then the regulatory spike has now, plunge, I should say, has now come for casino stocks, with regulators in Beijing saying they're going to impose restrictions on operators in Macau. That took Wynn Macau and some of its peers deeply lower overnight. Wynn Macau down 29% in the session. In other asset classes, I would point to iron ore, because you did have steel production in that data coming down. That weighed on iron ore, which actually was lower for its sixth day in a row. Futures down 4.2%, and you are getting a little bit of a haven bid for the Japanese yen. One of the outperformers in G10 FX is stronger against the dollar by about 0.3%. Now, here in the U.S., as you said, Anna, it was all about the inflation data yesterday. That took both stocks and bond yields lower in yesterday's session. Today, though, futures are in positive territory at the moment on S&P E-minis, up about 0.25%, and we go absolutely nowhere in the Treasury market. We are right at that 128 level where we ended the day yesterday after that CPI print. It is a weaker dollar story today, weaker by about 0.2%, and then I would just point to oil gaining for a fourth day now actually, in a row, up the better part of 1%. It's all about the supply side issues, Matt. That is aiding crude prices, with WTI north of $71 a barrel.
Yeah, we're seeing supply side issues in oil and gas, and some demand side issues as well here in Europe. Take a look at the mixed picture in terms of equities. First off, we've got a drop in the CAC, the IBEX, and the FTSE MIB. So down in the Iberian Peninsula, in the core of Europe, not doing a lot to the upside. You can see the DAX in Germany is little changed. The FTSE in the UK here in the UK is little changed. There are some gains if you look up into Scandinavia. Norway, which is just barely on the top of the map there, is green, and I'm going to talk about that in a second. If you take a look at the broader Stock 600 index, you'll see losses, but you do see gains in sort of everything Norwegian today. I put the NOK on here because there are gains in that. There are gains in the euro. Of course, all currency pairs are up against the dollar. You can see the euro and the pound here gaining against the dollar. And we also saw big gains for natural gas. Anna, this is something we're going to focus on, but I think it's interesting because you've got kind of a perfect storm. You've got the demand side in Russia as temperatures drop, demand is rising. And then on the supply side, you've got a lack of wind power. You've got a problem with nuclear dropping out. You've got the tropical depression Nicholas in the Gulf cutting off U.S. LNG. So natural gas just continues to hit record high after record high after record high.
Yeah, and we saw just before the top of this hour, benchmark European gas prices, Matt, surging more than 20% on ICE index. So certainly that will remain in focus for us. Let's have a quick check of the other things in focus for us. A look at what is ahead today. We get some U.S. economic data, including MBA mortgage applications and industrial production. So a bit of a focus once again on U.S. data. It's not U.S. CPI, but it could be of interest. At 11 a.m. New York time, ECB Chief Economist Philip Lane speaks at the IMFS webinar about the central bank's strategy review. And also, Matt, this might interest you. Elon Musk's SpaceX is planning the first all-civilian orbital. The mission bolsters Musk's efforts to make human space flights more common. Matt, I wasn't expecting that line.
I am excited.
I was not trying to suggest that you were common, but I wondered why you ended up in London and not at Cape Canaveral.
Yeah, you know what? I'm super pumped about this launch, not just because there are 4 civilians going up, but because it's going to be a Netflix special. So we're going to be able to watch the whole thing from, I guess, their choosing to their training.
Even more reason to be on board, and yet you're here. You won't.
Well,
you'll miss
I
the
didn't
Netflix
make the cut, but maybe on the next one.
Maybe on the next one. Okay, starting in China then. Let's get back to our economic focus. And the economy took a hit from tough coronavirus restrictions and new curbs on property. Retail sales growth slowed to 2.5% in August, that from a year ago. That was well under economists' estimates. Meanwhile, construction investment, that shrank also. Bloomberg's Tom McKenzie joins us here in studio in London to take us through all the details. And Tom, the retail sales number very much in focus because this is all to do with people's confidence to go out and shop and to spend money at a time when the Delta variant was resurging.
It's that key pillar of the Chinese economy that has yet to kick back into gear. And if you take that 2.5% number and put it in the context of China's recent history when it comes to retail sales, that is incredibly weak, well below the estimates. So the question is, when does the consumer come back? We've been speaking to economists from Morgan Stanley today. They say it's not going to happen this year. You also saw, as well as the impact of COVID and the Delta and the restrictions that we see that are very tough in China when they just have a handful of cases, you also started to see now in this economic data the impact of this regulatory squeeze. That is important. Construction, for example, contracting 3.2%. Construction, the real estate service, the property service sector, all of that is being tightened, and the focus there from China's regulators. Nomura, by the way, coming out and saying the markets are underpricing the risk of a significant slowdown in China. Here's the silver lining if you're looking for one. The PBOC still has a lot of dry powder. Many now pricing in another reserve cut.
Focus on that triple R.
We're seeing, by the way, a headline come across on the Bloomberg terminal. China sets a 500 billion yuan annual quota for the southbound bond link. So we've got that news as well as, and by the way, last night on the plane here, I watched Skyfall again. I rewatched Skyfall.
Is that because you're really missing the new one, which is just delayed and delayed and delayed?
Yeah, I can't wait for the new Bond. But you know, in Skyfall, he gets this this chip for a casino in Macau. And you remember he goes and cashes it in for, I think he gets 4 million euros for it. But Macau is really hurting right now.
I love that link from Skyfall to Macau. Macau is feeling the pain. So you've seen the biggest wipeout in terms of casino stocks in Macau on record. $18 billion. $18 billion. And this was because regulators now, they haven't switched their focus away from tech, but they've started to include the casinos. Absolutely central, of course, for the economy of Macau. And just for the context, it puts Las Vegas in the shade. It's the biggest gaming market in the world. So questions about licenses, oversight from regulators. You've got the likes of JP Morgan coming out, downgrading 6 operators. That just accelerated the sell-off that we've seen. We're talking Sands, Wynn, Galaxy. And this is also coming at a time when these casinos are already under pressure. The revenue's down 82% just the month of August. So further pain for that sector.
They need Bond back.
Seems like they do. 007 to the rescue.
All right, Tom McKenzie, thank you so much. Can't wait for that movie to finally come out, by the way. But let's go over to Washington, D.C. now. Lawmakers are returning for a busy fall work period, and they face immediate decisions on how to head off a government shutdown and potential federal default, while Democrats push to advance their ambitious $3.5 trillion spending plan. Emily Wilkins, Bloomberg government reporter, joins us now from Washington. So, Emily, it's a big budget day. What else do we need to iron out in the next 24 hours?
Well, it is absolutely now crunch time in Washington, D.C., not just on President Biden's giant policy plan, that $3.5 trillion reconciliation package, that social net of safety programs, but on so many other issues as well that have quickly upcoming deadlines. Today's sort of this soft, non-binding deadline for various committees to get their piece of the reconciliation bill to the Budget Committee. The Budget Committee will be putting everything together, but then after that, there's still going to be continued negotiations, amendments, and tweaks. And today's deadline is non-binding, so we could see some work after this as well. Basically, this is just sort of another step in the process. We're not quite to the point yet where lawmakers are going to start to vote. And we've seen a lot of concerns emerge around this larger social spending package. We saw lawmakers yesterday raise some concerns about the healthcare component of it. There's a bit of a stall there. We've heard concerns about some some of the taxes, some of the provisions that deal with parents leaving money to kids and how that is going to be taxed. So there's still a lot of pieces at play here that need to be figured out, and there's just not a lot of time. Remember, moderate Democrats arranged that on September 27th, the House is supposed to start considering this bipartisan structure plan, and progressives have said, look, if reconciliation isn't done by then, if we can't vote on both together, we aren't going to give you our yes vote for that infrastructure. We'll do it, but not until that larger social spending's done.
And Emily, let me ask you about the path that the $3.5 trillion spending plan has through Washington, because there was some suggestion just at the margin yesterday that with CPI coming off just a little bit, the inflation number not looking as aggressive as it was, that maybe for some Democrats who'd focused on the dangers around inflation, maybe for some moderate Democrats this might be enough to make them think, well, maybe President Biden isn't about to dangerously inflate the US economy. Is that something that's going to touch the sides in Washington, or is that too offbeat?
I mean, people in Washington were definitely paying attention to the CPI number yesterday. They're definitely paying attention to inflation. Democrats know that if inflation goes up, that's going to be really bad for their midterm prospects next year. At the same point, Democrats, they realize right now they've got the House, the Senate, and the White House. And that might not be true after November of 2020. And so they want to make sure they're getting large policies done that they can then take to voters and say, hey, look at what we were able to do. We were able to reduce the cost of childcare, help with elder care, expand Medicare, do things for the climate, do things for education, do things for infrastructure. And the concern among the Democrats is that they're not going to be able to go to voters and that they were able to get those things done. That's really kind of the key priority. But of course, this is a huge legislative package. You've got many, many opinions from within the Democratic Party on what does and doesn't need to be included, and now is really sort of when the rubber hits the road as far as getting negotiations done and making decisions about what will and will not be in this package.
Emily, I just want to briefly touch on some breaking news. We understand that President Biden is going to push for vaccine requirements in a meeting with top executives from Walgreens and Microsoft. This is according to Dow Jones. Obviously, this is a big push on the part of the administration, and yet there are still millions and millions of people in this country who remain unvaccinated. How big of a problem is the ongoing pandemic for President Biden as he tries to push his other agenda matters through Congress?
It's definitely a big issue, and that's why you're seeing President Biden really step up his tone in terms of aggressiveness of how much people need to get these vaccinations. You heard it in his speech the other week. You're probably going to hear it again today with this meeting. I mean, President Biden has tried to, ask Americans, encourage Americans, but the fact of the matter is that the American economy is still stalled in part because things can't open fully because of the Delta variant, and there are concerns about what future variants are going to look like. And so for President Biden, he's very much attached his presidency to the end of the COVID pandemic, and he's trying to figure out what measures he needs to take to really make sure that enough Americans are vaccinated, that they can really do a full reopening of the economy and COVID behind them.
All right, Emily Wilkins of Bloomberg Government, thank you so much. I just want to note another breaking headline. Crossing the terminal, the UK-France power cable will be halted until at least October 13th, and we'll have more on that energy crisis in Europe and the UK in just a moment with our very own Eddie van der Vold. But first, I want to take a look at some equities moving in pre-market trading here in the U.S. Of course, we were talking with Tom McKenzie about that casino crackdown in China. That is weighing on U.S. casino companies that operate in Macau. Las Vegas stands as one of them. It's down 8% in pre-market trading today after falling nearly 10% yesterday. Another stock moving to the downside is CureVac, of course, a COVID-19 vaccine maker. It halted manufacturing agreements with some manufacturers because of weak demand for that vaccine. It's down 4.5%. And finally, just a quick note of the original meme stock, or one of them, AMC, falling now for a second day. It's down about 2% in early hours. Investors, or retail investors, seem to be selling some of their formerly favorite names. Anna.
Okay, talking of new movie releases as we were earlier. Now, coming up on this program later, we'll be speaking about these market moves, of course, with Trevor Greetham, head of multi-asset at Royal London Asset Management, get his take on inflation and everything beyond. This is Bloomberg.
want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, in for Francine Lacroix this morning. Matt Miller is with me here in London. Kayleigh Lyons is with us, of course, in New York. Just to recap what Kayleigh told us as we were going to break, the UK-France power cable that has been subject to a fire is going to be halted until at least October the 13th. This wouldn't necessarily be a big deal if it weren't for the fact that gas prices are so high in Europe right now. Eddie van der Veld of our Bloomberg Markets Live team joins us here on set in London. Eddie, very good morning to you. This wouldn't necessarily normally be maybe a red headline across the Bloomberg, but today it certainly is, because with gas prices on the rise, disruption to this cable could really matter.
You know what, and I will be the first to admit, I will hold my hand up, I underestimated the seriousness of this natural gas story up until now. Because really, I thought, look, if you cover commodities for any amount of time, we talk about supply disruption, we talk about shortages all the time. We talked about, you know, peak demand, a peak supply of oil back in the 90s, and it never came. But here's the difference. Everything that could go wrong for natural gas at the moment and for power prices is going wrong. We're not getting the wind. We are, you know, we're getting these outages. Nord Stream was late. There's just these knock-on implications that all seem to be coming through. And if we, on top of that, get a cold winter, as early signs, we're getting a couple of cold weeks.
I mean, look, they just finished, so now Berlin can pay Moscow for more nat gas, but the temperatures are dropping in Russia, so they need the gas themselves. Plus, you've got this tropical depression, Nicholas, I believe it's called, in the U.S., which is cutting off U.S. LNG supplies. And LNG was supposed to be the alternative to Nord Stream. Now, both of those are offline right now. And by the way, if you look at the GMM now, the global macro mover screen, which I love because it shows you which assets are moving the most. Nat gas, 2 contracts there have black boxes around them. You only get a black box if it's moving more than 3 standard deviations away from the 30-day average. So we're just seeing these prices absolutely soar.
They are, and you know what? You know, even if we do get that new supply of gas coming through, we're late into the cycle, and the natural gas system just works like this. During the summer, you are supposed to be pumping these underground storage facilities full, and we're not there. We're not there. We're sitting at like something like 70% in much of Europe or across Europe. So we're just not getting the supplies through that we want.
Yeah, and if you look at the extent to which we have stockpiled a lot less, to your point, Eddie, than we would have done in a normal year. Eddie, thank you very much. Eddie van der Veld of our Bloomberg Markets Live team. Tonight on Bloomberg, an exclusive conversation with Christine Lagarde, the European Central Bank President, joins us on the David Rubenstein Show. Peer-to-peer conversations. That is tonight, 9 p.m. in New York. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Matt Miller in London. Now let's get the first word news and another major missile test in North Korea. Kim Jong-un's regime fired off 2 ballistic missiles that fell into the waters off the eastern coast. It's the second test in just a week of weapons designed to hit South Korea and Japan. Last week, during a phone call, President Biden suggested the possibility of a face-to-face meeting with China's Xi Jinping, but Xi declined to commit to one. He continues to avoid leaving the country even for major meetings during the pandemic. Xi hasn't left China in more than 600 days. And voters in California have overwhelmingly rejected an attempt to recall Democratic Governor Gavin Newsom. About 2/3 of voters answered no to the question of whether he should be removed from office. It's a major win for Democratic leaders who characterized the recall attempt as a power grab by Trump supporters. So, Matt, obviously this has major implications for the state of California, but also the Democratic more broadly. And I wonder how this sets us up to the midterm elections that are now just about a year away.
Yeah, it's very interesting indeed, but I think it's always important to remember California politics are not the same as U.S. nationwide politics, right? It's a very different state. They have different rules and regulations on a number of things. It's very difficult to license a motorcycle or a car, for example, in California compared to the other 49 states. And San Francisco, California, it's a whole different, what would you say, bowl of tea, cup of tea, bowl of porridge?
Ball game, but I'm sure we get that from you.
Ball game.
Yeah, Kaylee, he always brings it back to cars, and in this case, ball games.
Sports. Yeah, but Matt, to your point, I think, yes, of course, California is not the rest of the United States, but the basis of this recall really was the pandemic-related restrictions that Newsom had put into place. And we've seen those more heavy in Democratic-leaning states. So if voters are okay with it in Newsom's case, I wonder what the ripple effects of that are, especially considering this Biden administration has had a really tough go of it lately, from Afghanistan to the resurgence of the pandemic, struggling to get the economic agenda through Congress. So the Democrats kind of need every win that they can get here as those midterms draw closer and closer, Anna.
Well, hopefully they can get a win in California. I mean, if they can't get a win in California, it's going to be tough for them to get a win anywhere in the country.
So in that sense, this result not a surprise, but important that we get the context. Coming up on the program, Trevor Greetham, head of multi-asset at Royal London Asset Management. We've been covering the spike up in natural gas prices, also the broader commodities rally that we've seen in all kinds of spaces in the commodity markets, not in iron ore, but a lot of others. We'll ask him about that. Also the inflation push and the latest on the Delta variant. Lots to talk about. This is Bloomberg.
The electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have soon I should say, the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in for Francine Lacroix this morning. Matt Miller is with me here in London. Kaylee Lines is in New York. And Matt, I am very glad that you did not take a flight to Cape Canaveral, that you actually took a flight to here, to London, to come and see us.
It was pleasant, actually. It wasn't, the German side was really difficult. The Germans make everything bureaucratic and impossible, and you've got to have everything in paper and triplicate.
Are you saying that we did not?
On the British side, they just said, oh, you're American? Go on through. They didn't ask me for my vaccination status. They didn't ask me for my test results.
And I'm standing pretty close to you.
Just the American passport was enough to just
I should be a little worried.
Wave me in.
This is the new global Britain, perhaps, Kaylee. This is greeting Americans with a smile, maybe.
Love to hear it. I have to say, I'm really jealous I'm not with you guys there in London. It looks like you're having a good time. I'll just be here by myself in New York, checking as always
Kaylee,
on the markets. Yes,
I saw a bunch of beef eaters just outside on horses, and everyone's driving around in Range Rovers, and there's this grand architecture. It's exactly how
we really do live in a Disney
expect
movie.
London to be.
And I'll be here in New York. Anyway, back to the markets now. We do have stocks in Europe on the back foot this morning. The stock 600 is down just by a few tenths of 1%, but there are some sectors within the index that are underperforming. The biggest underperformer is retail, and I have a sneaking suspicion that has to do with the China data we got overnight with those retail sales growth, posting a much lower decline growth than expected. Also, when it comes to S&P 500 futures, we're in positive territory. Remember, the index has fallen in 6 of the last 7 days. They've been marginal moves, but still something to note. So we'll see if the gains in the futures session can hold come the opening bell in about 4 hours time. Right now we're up about 0.2%. No movement really at all in the Treasury market. We're still hovering right around 1.28% on the 10-year yield. More movement though for oil. WTI futures now up more than 1% higher again today. It's all about supply and the tightening of the market. Right now WTI is trading at $71.31 a barrel. That lift in oil is giving a small lift to some oil-related equities in pre-market trading. Apache is one of them. It's up about 1.3%. But a group of stocks moving to the downside are casino operators, specifically those who operate in Macau. We were talking earlier on in the show about how China is restricting the operations of casino operators there. So that's taking Las Vegas Sands and Wynn Resorts down by more than 7%. You have MGM Resorts down by another 2.5% as well, Matt.
All right, Kaylee, I have to say the continent looks so dreary from here in sunny London, and this chart tells a story that is actually the opposite of that. It's down and to the right here, but that's good because this is Italian-German spreads, right? And you want them, Christine Lagarde's job is to keep these spreads as tight as possible. And Anna, it looks like she's doing her job quite well right now. The costs for Italian borrowing are very low relative to German borrowing, and that's what the ECB needs to keep in check.
Yeah, absolutely. And for a while, you know, we weren't sure how much the ECB did have that in focus under Christine Lagarde, and it seems that it is still. Let's talk to Trevor Greetham, head of multi-asset at Royal London Asset Management. I'm torn, Trevor, because there's so much going on commodities, but I'll come to that in a moment. I'll go to Matt's point around spreads narrowing in Europe, and does that continue? Is that the direction of travel? Maybe they can't get any tighter?
Well, the central banks are clearly trying to have us believe that tapering isn't tapering and tightening won't happen for ages, and they seem to be succeeding. So, you know, for the Fed, we had that whole charade for months about were they talking about tapering.
Yep.
Well, the ECB's version is they are tapering, but actually it's just a sort of course correction. And they might untaper later, who knows? And the markets seem to be pretty relaxed.
Recalibration, Matt, wasn't a taper.
Yeah, exactly. It's not a taper. But if she's going to reduce the amount of money, if she's going to reduce the purchases in the months ahead, I mean, it is tapering, right?
It's tapering. I mean, you know, I'm old enough to remember rate cuts and rate hikes, and I'm sure you are as well.
That's very retro.
and you kind of knew what central banks were doing, and now it's all in this kind of, you know, meta philosophical area. And I think the markets won't seriously worry about rate hikes for a while. But next year, I think, when we've got through this kind of reopening transition and we find out what BAU looks like, if it's quite strong, if inflation's still pretty high, then I think you'll find more difficulty.
By the way, I joke about Christine Lagarde's job is to keep spreads in check because, of course, she had that gaffe when she first joined the bank saying it's not our job. Right. And she quickly changed her tune. But her real job, I'd say, is to do what Mario Draghi failed to do and get inflation back to a level that they want to see it with, you know, sustainable growth alongside. Is she going to be able to do that? I mean, isn't tapering the wrong idea when you still need to boost inflation to a decent level?
I was listening yesterday to Ben Bernanke speaking, and Bernanke would say, well, yeah, we can get inflation higher and we can get bond yields higher, but a bit of fiscal help would be welcome. And that's what you're not seeing a lot of in Europe, but you're beginning to get a change. Compared to the US, certainly. I think you're beginning to see a bit of a change, and we'll see what happens with German politics, whether actually that gets a bit of a boost. But with some fiscal support.
What do you want to see in German? What do we need to see in German politics?
Well, I think what you need to see for sustained growth across the euro area is more fiscal spending in Germany. And the sort of German balanced budget has been one of the problems at the core of Europe, really. But you've got lots of, you know, wars on inequality, wars on climate change, you know, going on, wars on COVID, which suddenly mean it's okay to spend more money in this environment. So I think you'll see more fiscal spending globally over the next few years than you have seen, you know, in the previous decade, and that should help to get bond yields and inflation higher, which is not a bad thing.
Well, but Trevor, to that point, we've had fiscal spending, quite a great deal of it here in the U.S. There's potentially more on the way. Congress is working on it right now, and yet we have a 10-year yield that's hovering in and around 130 and has been for some time now. So what will be the catalyst for higher Treasury yields specifically?
I think it's the re-acceleration of growth. So at the moment, you've got a slowdown going on that people are almost not talking about because it's so obvious. And it's the slowdown caused by reopening. You know, you reopen, you get back to full capacity, and then suddenly you're at a normal trend growth rate thereafter. The markets don't know what that trend growth rate looks like. I think it's going to be strong. With the fiscal spending you mentioned, with all of the monetary policy sloshing around, I think next year we're going to see quite strong growth. And as the market realizes that the reopening slowdown is over, and actually growth is still looking pretty strong as far as the eye can see, policy will look too loose. Then I think you'll start to see bond yields move, and that will be, you know, good for parts of the stock market that want to see sustained strong growth.
Yeah.
But the very expensive growth stocks are going to struggle in that environment, I think.
But while we're talking about the stock market, Trevor, obviously you're looking ahead to next year. But for the remainder of the year, do you think we're going to actually get a correction of 5% drawdown?
I think so, but I've been saying that for the last 3 months. I thought over the summer we would probably see that. You do have a really big disconnect at the moment between economic surprises, which are coming in negative because of the reopening slowdown, and earnings forecasts, which are still being upgraded. And I think the thing that will give is the earnings forecast. We'll start to see a wave of earnings downgrade just to get, with the fact that growth slowing towards trend. And I think that could give us a correction. Markets, as you know, are really bad at mid-cycle slowdowns. They don't take them well. At some point, they say, yeah, we don't care, we don't care. We care. And I think you will see a panic of some small kind. And then probably central banks will step in and, delay tapering or do something.
Yeah, we care when we care. Do we also care about gas prices? Very infrequently, but when we care about that. I just want to take us to that subject because we've got lines coming through from the Kremlin. Kremlin spokesman saying that a quick start of Nord Stream 2 would ease the European gas crisis. And I think we have charts that illustrate the extent of the crisis that Europe is seeing in terms of gas prices. Is this something on your radar, Trevor? How do you keep tabs on what's going on in gas?
Yeah, well, gas and commodities generally. I think you're seeing very limited capital investment in the area, but you're seeing demand pick up strongly.
They invested in Nord Stream 2, I suppose.
Well, they certainly did.
That's the Russian point.
They certainly did.
Lost their money now, right?
There we go.
But what you're going to see, because of the decarbonisation that's going on, you're not going to see a lot of extra new investment. And I think we're at the beginning of a multi-decade, potentially, bull market in commodities. So that will be in the background as another drumbeat of inflation that could unsettle bond markets. But I don't think this year.
Goldman Sachs also with a similar view then, of course, for a little while. Trevor, thank you very much. Thanks for joining us. On set in London, Trevor Greetham, Head of Multi-Asset at Royal London Asset Management. Coming up on the programme, the election in Europe's largest economy is fast approaching. We'll hear from some of Germany's top executives next. We'll get an update on what it is that the CEOs want to see from the German political elite. This is Bloomberg.
Do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do, actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later on today, Adam Posen, president of the Peterson Institute for International Economics. This is Bloomberg.
What we all miss a little bit in the whole election campaign is a clear outline of a European and German growth agenda for 2030.
At the moment we have a coalition, we need to have a plan for the next 10 years on how we are going to be as successful as we used to be.
We have to strengthen the EU's competitive position and to use also all the funds that have been set up now in order to cope with COVID and to recover.
We can only be competitive also here in Europe if we also transform our industries.
Those are some of Germany's top executives calling on the country's next government to lay out a clear plan to keep it competitive. Let's get the latest on the German elections with Berlin Bureau Chief Birgit Jennen. So, Birgit, how does it look right now in terms of the possibility for a winner? I guess Scholz is ahead. What kind of coalition does it look like he would choose?
I think if he has a choice, he probably is going to go with the Greens. It's their natural partner. But given that Scholz also is aware that he, aware of what really business wants, and what we just heard is that, yes, I think he also would like to have the Liberals on board, because that would give him space also to basically push ahead with some kind of reform agenda.
Is it Scholz's race to lose at this point, or is it tightening?
Well, I would say it's tightening, and we have to be aware that sort of when Merkel was elected, there was also a lot of volatility, and in the end, the polls weren't exactly right. They showed then a massive lead, which actually slimmed down on election night, and we have to be aware the lead of the SPD isn't that big. Sometimes it's 5 or 6, but that is really the utmost, and it's narrowing down at the moment. So we should also be prepared for a surprise turnaround maybe at on election day.
How crucial is foreign policy or not, Birgit, here? Because we heard during that debate with various CEOs from Germany, Joe Kaiser was talking about not wanting German business to get caught between China and the United States. The SAP CEO saying that needed to be a focus as well. You need to build bridges. There's no winning in being in isolation. Is there anybody, though, on the Germany ticket or any of those rainbow coalitions? There are so many possible coalitions. Anybody who would really reset things from a China relationship perspective, or do they all have quite a common view?
I mean, I think what Kaiser has been stressing, and he's right that really this has not come up big in this election campaign, and it is basically at the moment a little bit below the radar. Nobody really wants to go into foreign policy talking about it, because that is not with what you're going to win election. But it's true that really there is a decision out there. I think under Scholz's government, the course was probably going to continue that way. He's very close to Merkel on that way. I mean, there would not be in any way a decoupling, and basically one would take a very mercantile view on the relationship to China. But I do think that depending on if there would be a Laschet-led government, one has to see how the CDU is going to position, because you do see sort of more and more people who are calling here also to take a much stronger stand against China, especially creating a little bit more independence. So we have to see that, where this is going to go.
Yeah, really interesting to see then in a German context, and on that point in particular, who represents the continuity candidate. Birgit, thank you very much. Bloomberg's Birgit Jennen joining us there from Berlin. Coming up later today, an exclusive interview with the EU Trade Commissioner, Valdis Dombrovskis. Trade between Europe and the United States, no doubt, on the agenda there. This is Bloomberg.
from New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, in for Francine Lacroix this morning. In London, Matt Miller, also with me in London. Kaylee Lyons is with us in New York. Now, ECB President Christine Lagarde says the economy is recovering faster than expected, and she now expects the euro area to reach pre-pandemic output levels before the end of the year. She spoke exclusively to Bloomberg's David Rubenstein.
Europe is recovering more rapidly than we had anticipated. And we have, as a result of that, significantly upgraded our projections. So our projection for this year is plus 5%. So it's a significant upgrade, plus 4%, 4.6% next year, and back to sort of pre-COVID type of growth subsequently. But this year is certainly going faster than we had thought, to the point where we will have recovered to pre-COVID-19 levels before the end of the year, 2021. We had anticipated it would be early 22 at best. It's now going to be in 21.
Well, are you worried about the Delta variant impacting what you've just said, or the so-called Mu variant, which is now something that's on the horizon?
It's very closely related. We used to say that the best economic policy was an accelerated vaccination rollout. Well, we are still in that situation where vaccination matters enormously. But on that front, Europe has done quite well. We have more than 70% of the adult population that is completely vaccinated in the euro area. And some countries are doing actually better than that, in excess of 80%. That has been a significant boost for growth, and it has helped governments not go back to the stringent containment measures that we had seen previously.
You put together a package that was designed to make Europe solve their economic problems as it dealt with COVID. The United States had a similar package. In hindsight, would you say the package worked as well as you thought, not as well, or better than you thought?
You know, when we put it together, we were hopeful that it would work. But you know, truth of the pudding is in the eating. And it was a matter of days before we really appreciated that message was received. Fiscal authorities began to act in tandem and in good coordination as well. And I think the impact of next generation EU, when all Europeans decided to go and borrow together jointly, this entire package actually responded well and fast and big to the unbelievable crisis situation that we faced. So all in all, I think it worked well, and it certainly, we responded, I think, faster and better than we had in 2008 and then in 2011 in the European sovereign debt crisis.
That was ECB President Christine Lagarde speaking exclusively on the David Rubenstein Show, peer-to-peer conversations. You can catch that full interview tonight at 9 p.m. in New York. But you can also catch Mr. Rubenstein later on Bloomberg Surveillance. He will be joining Tom Keene, and Tom joins us now. So, Tom, what's your first question to Mr. Rubenstein about his conversation with Madame Lagarde?
Well, my first question is, what'd you learn? Because we didn't learn all that much from the press conference here a number of days ago, and we look forward. John Farrow, I know, is really focused on December. Kaylee, what I would do is look at where we are right now. A chart can tell 1,000 words within the politics of Christine Lagarde. She can't really talk about where we are. The German 10-year yield, and yes, it went down to a negative level, but with really significant rising inflation, has an inflation-adjusted yield out to a fiction. It's well out over 4 standard deviations. It's a general guideline in finance. If you're out over 4 standard deviations, bad things happen. So that's a challenge she and everyone else has in Europe.
You know, I loved seeing David Rubenstein's interview with Ron Barron yesterday, who says, we saw an opportunity to give Elon Musk $350 million. Now we have $4 billion. If I pull up a comp screen on Tesla versus Apple, Microsoft, Amazon, Netflix, they just crush everybody, Tom. And I've never really heard your take on that. What do you think about
I'm not going to give you my take.
I'm
not going to give you my take on Tesla, but I am going to say, is this a car company or a tech company? And you're comparing it with other tech companies, which is probably more apt, because that's the enthusiasm that you have for Tesla right now, is the technology of it, the engineering of it, the electricity of it, versus, comparing it to Ford.
Tom, thank you. Tom Keene, co-anchor of Bloomberg Surveillance. Thank you very much. That show, of course, follows this one. And now we'll look at what else we are watching. And Kaylee, we talked about this a little bit at the top of the program. SpaceX, that launch, that's clearly on your agenda.
Yeah, absolutely. They will be carrying the first civilian private space flight into orbit, an all-civilian crew, the Inspiration 4 mission. They'll be aboard a Dragon spacecraft mounted on top of a Falcon 9 rocket, and it will take off from the Kennedy Space Center in Cape Canaveral, Florida this evening. The launch window, I believe, opens at 8 p.m. Eastern time. They're going to orbit the Earth, hopefully for 3 days. But of course, this is an all-civilian crew, guys. No professional NASA-trained astronauts will be on board. So it's really high stakes, but also, Matt, could be a major step forward for commercial space flight.
Well, and think about how many mega cap tech stocks this brings together, because it is going to be a Netflix series on a SpaceX launch that we will all be watching on our Apple TV.
And it's a payments billionaire who's paying for it. He's bankrolling all of the others to take the flight.
Exactly. He made his... oh, you're not talking about Elon Musk.
No.
He actually made his first billion on PayPal, right? And then you're talking about Jared.
I'm talking about that, yes, exactly. One of these civilians who is paying for all of the others to go on board, and he made all his money in payments. So another
all right,
tech
so it's going to be a great thing to watch. Speaking of watch, I'm watching for an Apple Watch. I was really hoping to get the new Apple Watch Series 7. Kaylee convinced me that it would be a good thing for my fitness, and I could stand to lose 5 to 15 kilograms. But I don't know if I'm going to be able to get. I'm going to go over to the Apple Store later today and see when the Apple Watch 7 is coming out. But Kayla, you point out they didn't give a date. They just said, later this fall.
Later this fall. I am feeling quite vindicated that I didn't wait for the new watch and replaced my broken one last Friday, Anna.
I feel really boring now taking us to UK CPI, so maybe we should just linger on the Apple story. But I am focused on the CPI number. It was ahead of expectations here in the UK. A lot of focus on the Bank of England and when we hike rates, so that's what I'm watching. But crucially, still 1.6 million people on furlough. That ends at the end of September. The problem I have with all these new announcements we get from Apple is that things like camera improvements, my eyes are not good enough to spot the difference.
Deadly worse.
Anyway, we're only mere mortals. So that is it for Bloomberg Surveillance Early Edition. More surveillance, though, is ahead. This is Bloomberg.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
That has the pedal to the metal, and inflation is down the list of worries.
I think the Fed has already started to change their signaling.
The Fed is going to have trouble decoupling tapering from rate hikes.
We've had massive amount of inflation in this era of easy monetary policy and zero interest rates.
Well, you've seen inflation expectations pick up. They're still at levels that are overall consistent with the Fed's target.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Your equity market bouncing back again. We've seen this movie before, up 12 on the S&P, advancing a third of 1%. TK, we've got to kick things off this morning with a downside surprise, another downside surprise, and a downside surprise out of China.
Yeah, the news flow is extraordinary this morning, folks. We're going to cram it into 3 hours of radio and television. I believe Farrell will move it forward in the 9 o'clock hour. You're right, John. China is truly front and center, and it's not about the military calling China when President Trump was in this job. This is about tough economic data, and my litmus paper is the 30-year U.S. bond coming in nicely under 2%.
That's one heck of a miss on retail sales out of the world's second largest economy, well, Tom. 2.5% against an estimate of 7.
Leland Miller's going to say, can we trust the data? I think it's the trend of the data, and the trend of the data is below 6% GDP, and that's a new China. Never let the overlay of Evergrande and the rest of it.
Hey, Lisa, let's be clear. We haven't settled any debates in the last 24 hours, but we've certainly taken off some heat from this Federal Reserve going into next week.
Perhaps, although a lot of the under-the-radar kinds of gauges in that inflation print, you're talking about CPI yesterday, gave a different message. And I think that one aspect that certainly equity investors are focused on is the fact that PPI, the prices of the inputs that a lot of companies are using, are rising much more quickly than consumer prices. This goes directly to the margin question, and it goes directly to the momentum in the economy.
I know Gina Martin-Adams has been doing some work on that, so we'll try and bring that up a little bit later this hour. TK, we need to talk about the technicals too. You pointed it out to me yesterday. We're sitting right on top of that 50-day moving average on the S&P.
Across everything, we're sitting on moving averages. I'm not a big believer in this. I hate the death cross. I hate the golden cross. John, I really don't do much moving average study, but the fact is it's pretty elegant. We're coming down, not within a correction, and testing some of these levels.
Let's set the stage for you. This, what are we, Wednesday morning?
I think it's Wednesday.
It's a slow one, isn't it? Equity futures up 12 on the S&P, advancing about a third of 1%. Microsoft out with a $60 billion buyback in the context of its market cap, Tom. That's not a big one, but maybe that bails out that 50-day moving average for this S&P.
John, come on. Microsoft for the buyback. Amazon's hiring more people than God at 37,000 a year. That I looked at the Allentown warehouse yesterday, and that's the median income in Allentown. They're not going going in low wage, they're going in medium wage.
Yields in a basis point, 127.35, and euro dollar. Euro stronger, Lisa. Euro dollar 118.24, advancing on that currency pair, a couple of tenths of 1%.
All right, let's whip you through some of the data that I'm looking for today. 8:30 a.m. This is always interesting because it's the first read on September activity, September Empire Manufacturing Survey coming out. Expectation for it to continue to slow down. I'm looking at basically what we can get a sense in terms of margins, the fact that they have been able to charge pretty significant prices even as their import prices or input prices have somewhat slowed down in terms of the pace of increases. Meanwhile, at 10:30 a.m., we get EIA crude oil inventory report. The reason why I find this so interesting is because we have seen a direct correlation to how much oil prices have risen. They now are at the highest going back to early August, with inventories getting depleted pretty steadily, which really raises a question: why? Is it a demand story because we have seen demand slow, or is it simply a supply story as OPEC Plus doesn't really ramp up supplies that quickly? And frankly, there have been some idiosyncratic issues like Hurricane Ida that have taken certain shale production offline and certain Gulf of Mexico production offline. And then at 3 p.m. today, Ursula von der Leyen will address the European Parliament. The European Commissioner President will talk about the response to the COVID pandemic as well as the road ahead. I find it interesting from a trade perspective, given the relationship with China, given the relationship with the United States. And later today on this show at 7:15 a.m., we're very lucky to have Valdis Dombrovskis to talk about the trade aspect, the head of the trade negotiations for the European Commission. John.
Lisa, thank you. Thank you very much. TK, have you ever heard of the Sweet Green Index?
No,
ever heard of this one?
The acclaimed Cantor Sweet Green Index. It's in development now and being back-tested, as they say.
Let's get to it right now. Charles Cantor of Neuberger Berman, long-short fund senior portfolio manager and author of the Cantor Sweet Green Index. What's going on, Charles?
The Sweet Green Index, I think, references my study of how folks are coming back to work. And yesterday online, it was almost a 2-hour wait at 12 o'clock, which for us, like you in New York, it feels good to get some vibrancy back into Midtown, and folks are coming slowly back to work, and kids are going back to school. So hopefully it's returned to normal slowly.
I look where we are, Charles Cantor, right now. In the sequence of interviews I've done with thinkers who keep going back to the dreaded T word, technology. You and your team are expert at this. The overlay of technology seen, Microsoft, Amazon, Whole Foods, the rest of it, but unseen as well. Tell us about the unseen technology now that makes you a bull owning stocks.
Look, I think the technology goes to quality of business and sometimes references forward thinking. I think your Amazon example earlier, where you reference the hiring, is fascinating to us because it speaks to those that have scale and those that are forward thinking. I think a lot of businesses out there are struggling tremendously with labor. They're blaming to some degree the stimulus, which references the fact that people are getting paid a lot not to work. As that gets peeled back, I think folks are going to remind themselves that it's really about competitive positioning and a lack of forward thinking and a lack of building a culture and a pay system that really attracts and rewards the best talent, and the lack of investing in technology. And all of that technology investing is happening in some of the best businesses that have come out of COVID as winners and will remain winners because they're forward thinking. And the COVID experience for many businesses, I think, have revealed weaknesses in investment decisions, whether it be in supply chain, in culture, in labor management. And those seeds were planted not last week, but many years ago.
So Charles,
I think,
well, dovetail this, please, into a market call. How do you take this thesis that basically people are getting exposed by the COVID, even if they're hiding behind it, and decide what to buy and what to short?
Because for us, I think we all like to keep it simple and focus on the macro, focus on is it growth versus value. But as stock pickers and people that love understanding nuance and fundamentals, we just don't think you can paint this environment with one brush. And value simply means it trades at a discount to the market, and growth means that revenues are strong. The reality is, in this environment, you're going to be paying a lot of attention to the middle of the income statement, because I think businesses will continue to suffer gross margin degradation and potentially operating margin degradation through forces driven by supply chain cost, labor management, and lack of competitive positioning. And so we will continue to stay with the beyond privileged, resilient, and kind of leading businesses. Many of them sit in technology, but they sit in other industries as well. So I think my word of caution is to pay attention to the details. Yes, revenue growth's been fantastic because of kind of a generational shift in driven by demand coming out of COVID. But as the dust settles into next year, I think it's going to be a focus back on, wait a minute, which businesses actually are built to last, who has the pricing power, who can hire the best labor, and who has much more diversified supply chains that can manage the global interconnected environment. And so it's for us, it's going to be about the companies. It hasn't really been because of the flood of money and government stimulus and the like. But at the end of the day, it's quality of business that wins out. And
well, let's get an example of this if we can, Charles. And forgive me for jumping in. Give me an example of this right now. Who's getting it done? One of your favourite longs?
Well, I think our favorite long center in the technology space. We're big believers in Amazon because of their scale. We're big believers in Adobe because of their scale. I mean, we love the businesses that are facilitating today's environment, and you find them in businesses that would include Microsoft and Workday, and businesses that are maybe not as obvious to and are not discussed each and every day. So for us, the longs don't really change much. They continue to compound, they continue to take market share, and they continue to deliver for shareholders. I mean, Microsoft is an example. Yes, the $40 billion doesn't really matter, but it's a signal that they have more capital that they know what to do with. And like many companies, balance sheets are fantastic. And they're buying back their stock. Look, for us, I'd be very cautious on consumer-facing businesses that are going to face tremendous labor and supply chain issues into Christmas, as well as industrial cyclicals that are not going to have the pricing power necessary to manage supply chain complexities.
Hey, Charles, really important conversation. We appreciate your time to kick things off this morning. Thank you, sir. As always, Charles Cantor there of Neuberger Berman. TK, you've been talking about it and talking about it and talking about it. The companies that are getting it done right now sounds a lot like what Charles just told us.
I got some hate mail in, John. I know you get the love notes with Lisa. I get the hate mail, and the answer is I'm getting a lot of hate mail on a technology theme. I think it permeates, and from Mr. Cantor, you heard about it's not just the obvious Adobe, Microsoft, the rest, but it's what technology is winning in food. What technology is winning in ball bearings or industrial supplies? That's how you study this market.
What does that $60 billion buyback over at Microsoft tell you, Tom?
It tells me use of cash. Use of cash. At the end of the day, you're at a table. It may be virtual. It may be real. John, you're at the end of the table. What do you do with free cash flow? And there's only so many decisions you can make.
What did he say, Lisa? They've got more money than they know what to do with.
Yeah.
And that's a good sign.
It's a good sign. However, it also shows where is the investment? Just buying back shares, which sort of speaks to the lack of visibility going forward.
Equity futures this morning up 12 on the S&P 500, bouncing back about 1/3 of 1%. I said at the top of the hour, we've seen this movie before. We seem to have the highs in the early part of the day and then we fade. That was the story yesterday.
When we're on, right?
Let's see.
Talking about me, I fade in the middle of the day.
I include us in the equity market performance. We fade,
John,
Tom.
Surveillance nap. I don't fade. I have a nap.
Yields in a basis point on 10s.
Abramowitz doesn't have a nap.
From a beautiful morning in New York City. Good morning. This is Bloomberg.
With the first word news, I'm Rishka Gupta. Voters in California have overwhelmingly rejected an attempt to recall Democratic Governor Gavin Newsom. About 2/3 of voters answered no to the question of whether Newsom should be removed from office. It's a major win for Democratic leaders who characterize the recall attempt as a power grab by Trump supporters. Another major missile test in North Korea. Kim Jong-un's regime fired off 2 ballistic missiles that fell into the waters off the eastern coast. It's North Korea's second test in a week of weapons designed to hit South Korea and Japan. Last week, during a phone call, President Biden suggested the possibility of a face-to-face meeting with China's Xi Jinping, but Xi declined to commit to one. He continues to avoid leaving the country, even for major meetings during the pandemic. Xi hasn't left China in more than 600 days. The U.S. Justice Department has asked for an emergency court order to block a restrictive anti-abortion law in Texas. It's the first step of what is likely to be an extended legal battle that reaches all the way to the Supreme Court. The Texas law bars almost all abortions after the 6th week of pregnancy. And Spanish parent of the Zara retail chain posted sales and profit that surged back to pre-pandemic levels. Inditex was helped by sparing online business and the end of coronavirus restrictions in most of its markets. Meanwhile, Sweden's H&M reported third-quarter sales that missed estimates. The chain blamed lockdowns and restrictions in Asia and Australia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mariska Gupta. This is Bloomberg.